Okay, good afternoon, fellow valuers. So now, afternoon session, we will see the report writing portion. It is also not a difficult one, and it carries 3 marks. So proportionately, I divided this for this session for 145 hours, about 2 hours. Okay, so maximum we can take 2 hours for this, and after that we'll see case study some portion, so that tomorrow we'll get enough time for discussing all the revisionary. I would like to have a revision also, so we'll get time for revision and revision from law of real estate, valuation of real estate, income approach, market approach, cost approach, various purposes of valuation, important case laws on principles of valuation, principle of insurance and loss assessment, report writing, case study. Moreover, I would like to get some feedback, questions, uh, your doubts can be cleared tomorrow, all the doubts, whatever possible way. So kindly prepare for tomorrow class, especially because this is case study, 20 marks. So we should know some basic uh, facts, how to solve case studies, what is the requirement of need to know for case studies. So report writing, as long as you're concerned, it's not when your syllabus not showing international valuation code. So let's, even though let's look on, there's nothing wrong in it. You'll get a idea about what is our IVS says. Most of the questions, to be frank with you, are as per IVS. Most of the questions nowadays, it is from report writing, is from international valuation standards, because we are doing all the reports based on international valuation standards. So just have a few idea about this international valuation standards will help you in the exam also. So let us try. It is only for 2 hours, so I will finish it by 2 for 3:30. 3:30. Then we will get 2 or 3 hours more. So case studies, in that case, case studies we can proceed with case studies also. So it's 1:30 almost. I think all the participants are there. Previous, I feel some more people has to come. Anyway, I think some login problem for some people. Okay. So I will start now, and it is not a. I mean, even you can refer my PPT afterwards. So I start sharing the screen now regarding case report writing. Then afterwards, those who are coming late, they can refer and they can proceed with any doubt they can clear. So which one is this one? Report writing. Let's start with the. So report writing, there itself I have shown some illustration. It should be very clear, clarity of writing. So it's simple language, not technical jargons for a particular report. Then detailing, yes, you have to detail each and everything. A good valuation report contains all relevant, exhaustive report, not a bank format or any format, 2-3 pages. Don't limit on it. It depends on the vastness of the scope of work. So it may be runs in 50, 100 pages for a particular company valuation. So your report should be in detail. Whatever material, whatever the data you collected, and how relevant it is for the valuation, and how I mean, the data collection is more important. So it should be collected as much as possible for a particular report. But there is no hearsay. There should be evidence. All the data you collected from market, there should be some evidence. Either say you inquired with a document writer or a local broker, real estate agent. You have to specify his name, the contact number, everything. So he should not contradict afterwards. I know I didn't say so. So you have to be careful. Most of the people are not. I don't know why they are afraid of giving their names and even photographs. So detailing is very important. Then specific should be very specific. What is the specific reason for your valuation? So specifically you should go for that to find out the exact value of the property in upper market or in liquidation case, orderly liquidation or for sale value. In both cases, you have to study well. One thing I would like to remind you in this juncture, fair value and liquidation value is more or less fair value or market value, present market value, more or less same. Whereas liquidation value and forced sale value is different. Forced sale value is when we are in trouble or we forced to sell in distress. That is called forced sale value. Whereas as per IVS, International Valuation Standards, the property should be in a saleable or saleable condition. You should make it saleable. If it is an underdeveloped land or some what you call legal issues, it should be cleared. Everything should be cleared. Then only liquidate. You can liquidate the property. So that is the main difference. One is as is where is process. The other one is you have to take care of the buyer also. You have to be in a saleable condition. The liquidating value. Okay, so there is a difference between those two. Then standards, yes, standards. That's what I am. Finally I standards should be international valuation standards. That's what we are following now until our IBC code publishes. Probably next year beginning or so. We are expecting. So first, let us see what is report. What is the characteristics? Good characteristics. Quality, structure, and style. Actually, a report is the ambassador of value. We call it, it acts like an ambassador of a value, its style, presentation, everything. So be careful. No grammatical mistakes or calculation mistakes, or it should be in a professional way. You have to make a report. A valuation report initiate with the request of the client. Yes, the client. First of all, the client. We need this basic thing. We need a client. He should request by mail, by writing, or anyway. Even verbally, we are accepting, but it's not advisable. Always make it a point that at least a mail should be sent, where you can. Many of the our clients. This is the irony of this. doesn't know what is the valuation scope, or what are the values to be certified, all those things. So you can write him, this is the purpose, is this is the purpose, and what are the values, this is the values which we generally certify, these are the methods which we use. So you can take, I mean, give the scope of work accordingly, maybe for internal purpose. Some companies need to know internal purpose, so you can provide a good report for it. Then it may be for a liquidation or purpose, or a merger purpose. So purpose should be clearly intimated by the client, for which we need to advise them. They need also our advice in scope of work even, because they do not know what exactly they need. So this is the thing. So evaluation initiated with client in response to evaluation assignment undertaken by a valuer. The term of reference given by the client defines nature, scope, and limitations. See here, what I said, the term of reference that defines nature, scope, and limitations. So limit. What do you mean by limitations? So there are some limitations which we face while doing the assignments. So that those actually those limitations is a part of our report. Whatever limitation, assumptions, special assumptions, whatever these things we will learn one by one. So these things you should include in a report. Whenever there is an extra scope of notice during the assignment, it should be brought into notice of the client. In most cases, this why I added this point is, in most cases we start with an assignment with limited scope, or the scope which is defined by the client. During the process, we find that some extra job is to be included. Then only you will get a fair value for this particular. So you should inform the client in writing, and he should reply. I mean, with his consent only, you can start the assignment, the further assignment. Otherwise, you have to tell him this is the thing. If you are not considering this particular deviation, then this troubles will generally they will accept it. So what is the issues we face? So any deviation, any extra scope notice during the assignment should be brought into notice of the client. Okay. So a professional approach, as I said, consistent method of the work. There is a consistency. Consistency in sense in any method. There should be a consistent way of doing things, working out. And absence of spelling mistake, grammatical errors are silent features of a good report. So spelling mistake should be, as far as possible, spelling mistakes should be not be there. Grammatical errors, etc. Or mathematical calculation, we make sometimes mistakes. Even rounding of the figure, it should be consistent. Sometimes you rounded for one digit, or sometimes you rounded for two digits. No, in a report, you always follow only one method, rounding off. This shows a good report and a consistent report. That is a consistency we expect. A report could lose its credibility if there is any calculation or mathematical error. Yes, its credibility is gone. So even though it is simple calculations for you, but while typing, or always your report should be given to a third party. Third party in the means your relative or somebody to read it, so that they will find easily than you. Wherever grammatical mistake or a spelling mistake or mathematical calculation mistake, they can very well point out it. So always make it a point, because once we write, we see our subconscious says it is okay, but there could be some errors. Errors can be creeping. So that point also you have to take into account. Then comes the report should be typed neatly. Yes, you use professional font, not you know some fonts which are looks so beautiful and like so many fonts are there, but do it in a professional Times New Romans or Calibri, whatever. So no more, much decorations we don't need. And bound properly, bound it. It should be spiral binding or stapler or whatever way. You can or bind it as it depends on the I mean, your work and of course your fees. So if photographs and drawings are enclosed, these should be clear. So photograph should be very clear. You are taking photograph of the property. I think I have mentioned you can use geotag photograph. Geotag photograph means there will be longitude, latitude. There is no other place in the earth with the same longitude and latitude, you know it. So better to take in a geotag photograph application, which can be downloaded from your Google Play. Geotag photography, tag for geotag photography or geo this photographs. That you can select a one. There are many applications which you see the reviews and download one for your in your phone, mobile phone. That is photograph. It will be clear. Then date will be there. If you take the photograph, date and time also it will come. So there is no contradiction. You know, we should mention date of inspection. So during the inspection only you can take photographs. So while you fill date of inspection 12/9/2021, that will be there in the photograph. So it's a material proof actually. So you inspected the site. That means don't sublet your valuation to anybody. Take only valuation which you can go and inspect yourself and then take order. You should be in a frame. All those things. So clear photographs presented in a way that adds professional status of the report. So this is the some of the good quality writing report. Now, purpose of report: defining scope, limitations, adopting methodology, data collection, analysis of data, conclusion, opinion, and disclosures. So these aspects should be contained in a specific report. See, purpose of report. What is your purpose of the valuation? Report means you can write purpose of valuation to assess the fair value and declaration value for a particular property, whatever you can, as per client's requirement. Defining scope. That is, what is scope of valuation? Your scope of valuation, you can say this much section of land and building, this all these things, whatever you are going to evaluate. Then limitations. What are the limitations you can write? Adopting methodology. Which methodology? There you have to mention other you are going valuation methods like market approach, cost approach, or income approach. Then detail it or rental profit method. All those things you can mention there. Then data collection. As I said, market comparables or data from if it is building for material specification, that is important specification of the building that you can get from drawings, engineering drawings. Then plinth area. If there is any illegal construction, that also you have to see from the approved drawing. If there is any deviation, you need not value at all that portion. Or if it is very serious, don't go for value at all. Don't do any valuation on it. You inform your client that there is a major violation in this particular project, so that it is not possible to value. So proper legal approval should be there during this. So data collection, any data you can collect by talking with somebody or neighborhood, everything, civic community. Yeah, there is a school nearby which has got a good, or a cinema theater in Oxford, whatever. So that data collection contains everything. So that means the valuation common valuer and expert valuer difference between an expert valuer and a common valuer is an expert valuer will go for all the data whichever he come across, and he will note it down. So that report should be more reliable. Oh, he collected so much data, he analyzed it. The next part is analysis of data. Those data should be analyzed. So, is suppose cinema theater is there. Usually, cinema theaters are at the center of the town or a city or a crowded area. So that makes the particular property more valuable. Similarly, other aspects also, civic communities like, say, airport. Near airport, sometimes it is a nuisance because of noise pollution. But even though if it is, say, 3-4 kilometers away from airport, it's a good plus point, weightage. Then conclusion, you have to conclude it, your conclusion of this data. Then you can have your own opinion, suggestions. You can give even suggestions also. Suggestions means, suppose fair market value, you may not able to suggest anything, but in liquidation value, you can suggest highest and best value, HABU, HABU, I told you. Highest and best usage of that particular property if it is liquidated. You can change the business, or you can even so suppose a vast area of land is there and a factory building which is in total loss. At the same time, it is a residential area, so it is better to remove that temporary sheds, whatever trussed roof or whatever you have, then make it a plot, plotting, schematic plotting, for residential colony, gated colony, whatever. That may be a best, highest and best use. So it depends on the situation. Value, you should be in a position to analyze it and say this is the highest and best use of the property. Then disclosures, you have to make all the disclosures, whatever you gain, your approach or your method or your opinion, suggestion, all disclosures. These are all disclosures actually. So you can disclose everything. So second part is a valuer is responsible for finding his report, keeping above points in mind. A report can be written by a valuer. So everything keeping these points which I mentioned, you can write a report. Salient features of a good report. What is a good report? First of all, everything. We should be organized. Even for if you are taking a MEP class, for example, from the yesterday or 3 days before itself, I started preparing. Even though I know the subjects, but still, I need updated. I need more materials. I don't know how to, give you good presentation, good information, whatever possible way. So it depends on that is organized. Similarly, airport also, it should be an organized structure. Interrelation of sections, various sections, as I pointed out, these sections interrelated. How you relate it to the value. So that is in an organized form. A section should not be contrary with respect to one another. Yeah, in one page you write this, the other page it is contrary to the other one. No contradictory statements. It should be organized. Now, grammar and spelling. Keep it simple. That is, reader, he should understand what he meant by this. Because particularly our profession, many of the people do not know, as I always say, some wordings or some concepts. So keeping the reader in mind, you should use simple languages. Simple language you can write. Definition of technical jargon. Yeah, suppose you use a technical jargon like what you say, FSI. So, simple FSI. So you should write FSI is equal to total plinth area divided by plot area into 100. A full form also you can write, floor space index, FAR. That kind of technical jargon, when it comes for a layman, you can add all these things in detail. So definition of technical jargon should be there. Suppose you use a word atrium. What is an atrium? It's an open skylight or something like that with the tree. I mean, small plants and so this kind of things. You can even the photograph. You refer the photograph. You can say, take a photograph and write. There's an atrium inside the building. So refer it. That's all. Refer the photograph. You can write proper punctuation and spelling as usual. Punctuations, comma, hyphen, wherever it is required. All this spelling. Then calculation. Avoid calculated errors. Rounding off should be uniform. As I said, if you are rounding off suppose 10.361, you write it 10.36. Suppose you are writing 3, whereas it is 10.368. Write 10.37. No issue, but it should be rounded off to 2 digits. It is up to you. Sometimes you have to round it off to 4 digits. Which case I will tell you. Those are where you are using tables or that formula. You might have noticed it is 0.6578. So there are maybe 10 or 12 digit rounded off to 4. Just reminding you, particularly in the case of income or profit approach, income approach, it should be rounded to 4 digit decimal places. So then only you'll get a correct answer. Even for two, if you use 2 digit, the answer will vary significantly. So try to write in 4 digit, right? Then appearance, professionally typed and bound, as I said, it should be professionally bound. You can put a cover page, your credentials, everything. Uh, you can prepare it in your own way. So then clear photographs again, you know it. But when I say clear photographs, you can then while report writing, I don't know. I can shall I say this here because why mainly the land, particularly in some area, vast area, you don't in village area, especially you won't get demarcated land. There are so many values are in trouble in court cases because without demarcation, how can we know the area? Of course, your sale deed, your tax receipt, everything is there. How do you know this is the particular area? So you need GPS machine. You need 2, 3 machineries, tools, equipments like distance meter and GPS system where you can locate coordinates. You can walk around the field. You can take different coordinates and you can, or in AutoCAD, you can plot it. It cost, I think, 8,000 to 10,000 rupees. So a good valuer has got all those things. Should process distance meter, GPS. These two are important. Then tapes and all, everything, whatever a civil engineer uses for this purpose. Okay. Then report writing for various purpose of valuation. So we have, as you know, we learned that valuation is done for various purposes. So many purposes. Now coming days, it will be more opportunities are there. For time being, I will explain most uh, relevant one. Sell purchase or sale or purchase, whatever. Here a value report act as a backup of sale instances or return over investment. So how this is how we approach in a sale or purchase uh, valuation. So sale interest should be shown. The return or investments. Sometimes they will ask how much I will get back or how much can I return from this investment when I purchase a particular uh, building or factory or industry, whatever. So return of it. These are all various job to find out. You will be mastering it within 3 or 4, 6 months practice. Mortgage. So this is what we are doing in most cases for banks. the value considering existing use only, but provision can be made for future development in value. These are all suggestions you can make to the bank manager or financial institution. One is existing use, we can value as a cost approach for building and market approach for land and all those things. But at the same time, you can write provisions can be made for future development in value, because after 3 years, bank is giving mortgage loan for 15 years or 20 years. So you can say future, what are the development, even surroundings, there is a chance to coming up a stadium or a sports complex near to it. So you can write after the completion of this particular sports complex, the value is likely to higher by say 30%, something like that. It is by your judgment. You can imagine the things, or 5 kilometer away railway station, new railway station, they are going to construct. Suppose you can point it out, and after 3 years, the value of the land and these things will increase. Uh, Such provisions can be made future developments that you have to write. Then for taxation purpose, this is as per Wealth Tax Act 1957, Section 34 AB. All the values here, actually, we started companies law, IBBI, Insolvency and Bankruptcy Board, etc., under Ministry of Corporate Affairs in 2017-18 only. And before that, all the values are registered under income tax, CBDT, income tax department. So that you need 10 years experience, and you can give an application to the chief commissioner. He will see your experience and everything, and he will approve as a valuer. So the first step to be a valuer in those periods is to get approval from income tax department. Then only most of the banks will take you as a valuer. Or you should be a member of any of the valuers organization. Then also you can practice, because they are supposed to do continuous education program, so you are updated, you know the things. Being an engineer, it will be easier for you. So taxation purpose. So since at present there is no wealth tax now, as I said, there is no wealth tax now. No valuation report is required. So taxation, no valuation report is required. Before it was there, up to 9 years, it was sent into the 18. Okay. Valuation is required under various sections of income. Then valuation is required under various sections of income tax. 2-3 areas, like cost of construction. Sometimes income tax department may ask. They have their in-house officers. Sometimes they will give you an assignment. If you are an expert valuer, if they feel so, they will give a valuation to you, because most of the income tax in-house values are taken from departments, even water authority department or irrigation department or whatever. So engineer who is experienced for the 25-35 years in only construction of buildings, housing complexes, everything, they will prefer those people. So an expert valuer, they may ask for the opinion. So what is construction cost? So what the actual cost he put into, don't take the profit of the builder for income tax purpose. So you will get the actual cost of, that is by estimation method or whatever method you adopt, detailed estimation or plinth area method, any method you can adopt, but it should be justifiable. So that is there. So value, first one, construction. Then second one, I think I taught you, capital gain. What is say long-term capital gain, short-term capital gain? If you sell, if I sell my property for say 50 lakhs rupees, which I acquired for 5 lakh rupees. So this 5 lakh rupees on 2000, suppose I purchased this 2000, this property 2000. Inflation is to be considered. So 5 lakh will be after applying the cost inflation, it will be maybe around 40 lakhs. Suppose 40 lakhs. Again, I will explain. I purchased the property on 2000. I am selling it now for 50 lakhs. That time I purchased it for 10 lakhs. Now, considering the cost inflation index that is also given by CBDT, Income Tax Department table. So you convert it, you will get 40 lakhs. So the rest 10 lakh is my profit, right? From my profit, I have to pay 20% to government. Take down this point. Now it is flat rate, whether it is company or a person or an associate, whatever, it is 20% plus cess. Cess will become. So capital, you have to write capital gain only. The other thing they will take care of. Your capital gain is 10 lakhs. Finish. To underline. Don't go for a capital gain tax. Tax portion is done by our chartered accountants. They know it's better than us. What is the percentage? What is the cess? What additional charges? All those things. So you need to write only my capital gain is 10 lakhs. So they will take 2 lakhs to government plus whatever smaller. So I will show in detail how to calculate. I think I already shown. Again, tomorrow with case studies, it is there. So capital gain, how you calculate. Then third one is actually 56. It is not generally we are not receiving any case of it. So mainly cost of construction and capital gain is the important things which you are going to get assignments, and most and best suitable, one of the most interesting part is capital gain. There an engineering skill you require, more data banks you require, because fair market value of 2020 or 2000 which I property bought maybe not available. You have to justify how you arrived at that that time it was one per square feet per square feet 5,000. How you arrive it? So these kind of things you will learn later. It is from experience only, from the data bank only. So these things we will see after when you do the case studies. So these are the valuation is required under the last sentence. Valuation is required under various sections of income tax. So these are the wealth tax is not no more. So we won't go for it. I'm going to strike it off actually. But for time being, let it be there. Wealth tax is no wealth tax. So that's a good information for you. So I put it there. Let it be there. Now insurance, we learned various risks of insurance should be considered. So insurance valuation also you can do. That is for, I told you, no, insurance and loss assessment. It's a particular field where people earn so much remuneration. So we just seen some of the basic things, insurance and loss assessment. You can update your knowledge, acquire more knowledge on it. Can be a successful loss assessor in future. Liquidation, physical verification of inventory and assets should be done in liquidation purposes. So I made a note on it. Inventory includes land and anything that is permanently affixed to the land. So inventory means land and anything that is permanently affixed to that land, such as building installed system within those building, any system within the land, such as irrigation or canals, building equipments. Property inventory can also include roads, parking facilities, fences, utility systems, or structures. So whatever fixed to the land, that particular property which you are going to evaluate, this can be taken into account in liquidation. Now, contents of the report. So that is the third portion of it. What should be the contents? So steps involved to arrive the contents. Identify the purpose of the valuation. I'm repeatingly, why we are repeatedly saying this? This we should know it. Then see, while you repeatedly say same thing, then only it will be come into our mind. This is from my experience. Identifying the purpose of valuation. This is most important part. Purpose. Outlining scope and limitations. You should. What is the scope? Scope of the work. Methodology, as I said earlier. Collection of data. Analysis of data. Conclusion and disclosure. These are the steps which I mentioned earlier also. Again, I am giving you the importance. For the importance of these steps involved, this is the things which you require. Now we'll go to essential contents. So essential contents of the report. First, client details, his address, contact number, everything, or where the property lies, which number, which survey, which village, which city. These are all client details. Then dates. See, if it is a we are going to be company value, company loss valuation. So we are supposed to be by passing insolvency and bankruptcy board exam. So you need appointment date also, date of appointment. Date of appointment by authority, which whatever, whoever be the authority. Maybe a resolution professional, maybe an IP professional. IP professional, resolution professional means RP. IP means insolvency professional, or it depends on situation. So date of appointment letter. You should get a appointment letter in mail as well as start the work. You need a mail only, but appointment letter and hard copy also to be keep in your file. He will send it. So date of appointment. What is measurement? You are appointed as a valuer for the following properties. So everything is mentioned there. So you note out this date of appointment, date of site visit. That also you can write. Date of valuation. You can write that one also. Date of valuation. When you are going to the particular date. After inspection, you may be valuing or preparing the report after 2 days. So that date you write. Then date of reporting. You are sending this on the date of reporting. Actually, date of valuation and date of reporting. Here I would like to mention one more thing. Sometimes all the data, all the legal data may not be available at the time of inspection or during the appointment also. So some legal documents like say location sketch or possession certificate, say possession certificate is required. You will get after the valuation date. So you can write there the document, the date of document received. You can write it down. Actually, the date of last document received. So that will be also a plus point to you, because if you delayed the submission because of this, you have to mention that I have received this document afterwards of my site visit and all. So that also you can write. Then location. You explain the location. It is beside Bombay Pune Road, etc. Waterfalls. I don't remember the name. Near to this Chijo, like that. Whatever. In survey number so and so. It is so history of ownership. So that is parent deeds, history of ownership. Before who was handling this? Liquidation, that is for liquidation. So previous owner's name, details. That also you have to collect. Inspection, collection, and analysis of data. Okay, I explained already. Type of construction. Yes, very important. What are the type of construction? Load bearing construction is there. RCC framed structure is there. Load and bearing and RCC combined construction is there. Trussed roof is there. Composite material construction is there. So many kinds. Whatever the construction method they adopted, prefab construction is there. So that you have to type it. Type of construction. You have to mention. Then method of valuation. As I told you earlier, the method. Three methods out of which method you are adopting. Estimation of value. As I said, if it is market comparables. If it is cost approach, you have to calculate replacement value, then depreciate it. Or if it is income fetching, capitalize it. So also these three methods, estimation of value, method of value, estimation of value. Then finally you reach the value. Then you can put assumptions. That assumptions are mainly to save you yourself. Legal aspect, sometimes if you are not happy with we are not legal expert or forensic expert. Sometimes they give copy or even the copy will look like a original. So we are not forensic expert also to authentify this one. So you can write those things. Assume that this is assumed as clear, marketable, enforceable property. These copies. That assumptions you can write down. Valuation reports under the company's registered valuation 2017 shall prepared following international valuation standards. This is what I want to introduce now at this stage. IVS standards. Unless Government of India publishes the Indian valuation standards, we are proud to say that we are going to publish one of the much awaited by the whole world. The Government of India going to publish Indian valuation standards. We are expecting for a long time. Because of COVID only it gets delayed. Otherwise, from this year we would have our own standard, our country's standard, national standard. So that is the point. So then, hence the values have to understand general standards. IVS 10110. Don't worry about it. Don't confuse yourself. Only a few. Starting 1012, 1045. Then you go to special category only. I just they may ask scope of work. Same as organization, I told you no. For each category or each characteristic or each steps, they have scope of work. International standard. IVS 101 pertains to scope of work. By heart it. 102, that is investigations and compliance. What are the investigations you are doing? And whether the investigations are in compliance with IVS standards. That is 102. Then 103 is reporting. Then 104 is very important, basis of values. That you can learn afterwards, or let me try to get a soft copy at least for you. I don't, I have it, but I'm not sure it is in my, because I lost my phone last week. Okay, so it was there. I changed everything there. Anyway, so if possible, I will send you these things in detail. That book I have shown a red book, no? So that is international valuation standard. Everything is explained. So 104 is basis of value, but most probably they will ask in an international valuation standard, basis of value is in which section? You can write IVS 104. Then what is 105? Valuation approaches and method. 105. So whenever you write a report as per IVS 105, I am using this particular valuation approach and method. that you can write. Okay. Valuation report of a valuer is a considered opinion. It is a considered opinion. Okay. One valuer's value will not match with other value. It may be some difference, but not much. Most probably 10 to 15% it can be. Which is based on a survey findings, study of documents relevant to the property, investigation, including search and market inquiry. So you are see, when you are going to be an expert valuer, these things you have to keep in mind. Your findings, your observations, your investigations, everything matters to arrive this particular report. I mean, value and the valuation style of valuation report, and it will convey a good remark on it. Hence, valuation report is considered as an ambassador of the IS. As I told you, valuation report is considered as an ambassador of the valuer. The particular report is an ambassador. It goes to many hands. Whenever it sees by somebody, okay, he has given all the details, photographs, sketches, so many sketches, so many detailing. So that itself shows if I submit 3 pages report and the other values submit 50-page report, definitely he will get a good opinion about him. In exam paper, it is not like that. But in valuation field, it should be exhaustive. In exam point of view, we have to write the point only, and you can get the good marks. But at the same time, in valuation, you have to be exhaustive. You have to write everything in detail and in a good style. So it's an ambassador for you. You know what is an ambassador? A man who goes outside for our country to represent our country is called an ambassador. Similarly, a valuation report is ambassador also. Okay, that's all. Now, communication skills and technical skills. A valuer having excellent technical knowledge, but poor communication skill will produce poor report drafting. This is also a good example I have seen. Many good senior valuers, very good valuers. They may be preparation of their reports are drafting maybe poor. I will I can write better than I can convey, or better than I can verify reporting. So that a report should communicate the reader. So report writing, drafting is very important. So second one, hence the valuer must develop expertise both in technical and communication skills. Sometimes we have to communicate also with people in a way, such a way that they should feel friendly with us. They should feel they are we are okay, reliable persons. So they will give some kind of feedbacks without even knowing that this will affect their own valuation or anything. So we'll get when I'll talk with the owner or a client or a layman nearby, you will get some kind of knowledge from those persons. So you can analyze all those things. Human psychology is good for a good valuer. To be frank with you, you know something about human psychological hacks. That will help you more to get the data from others. So next one, a valuation report should be detailed and associated that the user of the report could visualize everything about reported property as if he has physically inspected, seen the property, the said property. That is a report. He can when they read it, they should feel that they are seeing the real property, they are standing on the property, they are there, not even though not physically. So the report contains those trees. You can write whatever number of trees are there, mangroves are there, whatever you are seeing. So he will feel that he is physically inspecting the particular site, the reader. That is a good report writing. Okay. So next slide. If the valuer cannot substantiate his opinion by producing supporting evidence very important. Such report is totally useless. I told you, beginning we see. If evidence is not there, nothing is there. You have to produce evidences. Otherwise, this report will be rejected. You cannot assume anything. You cannot say person X said this much. But person X credibility you should know. Credentials you should know. You should report that. Then only the evidence will be there. Phone number, everything. So evidence is very important. Without which don't go to any valuation without evidences. Okay. A building part, of course, and as an engineer, we have the last word. Building part, land part, especially evidences are very important. Building, okay, I took value from CPWD or your state PWD. Cost index I taken from this CPWD department or PWD department or LSGD, local government, whatever. You have some data available in public domain. Then you are comparing it with your specifications, the particular property specification. Then you are arriving a particular replacement value. You got it. So you can justify it easily, very easily for civil engineers. So that portion is not that complicated, but land portion you have to get all the evidences. And of course, in goodwill evaluation, part of it, it is goodwill practice. Those things also you have to take apply your mind properly, so that you will get a you can substantiate it, you can get a reliable value. A value should use simple, short, plain words in report. Simple, short, plain words. Clarity is one of the most important qualities of a good report. Should be clear. Clarity is very much important. When a particular method is selected by the valuer, in by the value, in the valuer must mention why said method is adopted. Yes, you have to justify why this method is important. Because suppose it's an income fetching manufacturing unit, they are not giving you a balance sheet or a previous balance sheet, previous cash flow, anything. You cannot do a value. You cannot arrive a value depending on income fetching. So in the absence of the evidences, I selected land and building method, building in cost approach method. You can write it, even if it is income fetching. For example, a petrol pump. It's a special case. If a petrol pump comes for a valuation, you should know per liter, how many liters of petrol is consumed in a month, then you convert it to a year. Diesel, then lubricants. Then, okay, these are all the main items which they are selling. Then outgoing, salary, income tax portion, all those things. So all these details may not be available. So it is income fetching, it's a profitable business, but you are not in a position to do it in income fetching method. So you justify it in your report. I am not able to, the valuer is not able to produce a value based on income fetching, since we don't have that details, relevant details, cash flow or whatever, 3 years balance sheet, whatever. So you don't have it. If they are not ready to provide it, you cannot do anything. So whatever documents they provide, based on that only you can work out. I hope you are clear. Don't hesitate to wait for, hey, what can I do? It's an income fetching or apartment. It's rental. There are so many rentals. So I am not able to get the rental. Don't worry about it. You write it down in your report. There is no reliable data. available. If it is rental, as per rental control act, okay, they will give this is the rent, then you can convert it. If rental data is not available, what will you do? You report it. It is not available. So I go for this method. You can justify it. That is the arrangement value estimation. So where are we? So justify the selection method value. Here. The last point. Okay, this is the one. Last one. When a particular method is selected by the value in the valuer must mention must see. I'll tell you one more thing. In IVS, there is strict rule. Must, should be, may, maybe. These are all defined. Must is you have to do it. By legally you are bind it by must. You see wherever you see in IVS must, you have to follow that. No deviations. Should be. You have to justify it. Why I deviated. May adopt. You can may adopt is you should not only justify it, you have to write every points. Why I reach, sir, that is why I'm telling you in IVS standard it is very difficult to justify things. Must is a must, should be is having some kind of deviation. Maybe is may, if you use the word may somewhere you found, you have to justify it as well as you have to make all the precautions to protect yourself in the report. So that is very important. So whenever you read IVS standard codes, it's a small book. You can read it in a day. Check for the words must, should be, and may. In glossary itself, they are explained it. Show me that book. I think in the glossary itself, it is given. See, should. It is given should. See, other things are the subject, asset, valuation purpose, valuation reviewer, value, valuer, all those things. Purpose. There is a word called glossary in a word should. I will read it for you. For example, the word should indicates responsibility that are presumptively mandatory. Presumptively mandatory. The valuer must comply with requirement of this type unless the valuer demonstrate the alternative actions which were followed under the circumstances were sufficient to achieve the objectives on standard. This is the definition of should. Whereas must, the word must indicates an unconditional responsibility. It is called unconditional responsibility. Must. The valuer must fulfill the responsibility of this type in all cases which circumstances exist to which the requirement applies. May, the word may also it is given. May means the word may describes actions and procedures that valuers have a responsible to consider. It is our responsibility to consider. Matters described in this fashion require the valuer's attention and understanding. How and whether the valuer implement these matters in the valuation engagement will depend on the exercise of professional judgment in the circumstances consistent with the objectives of the standard. So each and every word in this book is very important. I'll tell you, this is a very small book, 100 pages around. So various framework is given. Then starts whatever I have shown here. This IVS 1, IVS 2, and all the general standard. Then starts from here, general standard, IVS 1, scope of work, like that up to 5. Then you have to. Then some asset class is they are mentioned. So out of which 5 or 6 asset classes, asset standards is mentioned. 101, 105 is important. Apart from that, you should know asset standards. That I think it will come in the slide. Okay. So let us go further. Look at it. Okay. Every value should develop its own style of report writing presentation. In case of wealth tax authorities, banks, LIC, financial institute, the value should value should represent the valuation report is prescribed formats. Yes, there are sometimes we have uh, Hello, can you hear me?
Sir, now we can. Yeah.
Sorry for the interruption or failure.
Yeah.
Okay, so there are only 2 more pages in this. By that time, I hope power of supply will be. We'll see now IVS framework. There's nothing but compliance with standards, assets and abilities, definition of a valuer. What is valuer? As individual, group of individuals or a firm possessing the necessary qualification, ability and experience to undertake evaluation in an objective, unbiased and comprehensive value. So objectivity, IVS framework, that's our IVS framework. Now I have told you some general standards are there. So that we have seen reporting basis of value or the. So uh, uh, asset standards. That is, start from IVS 200. That much is only in the book also. Don't 140. No, asset standard starts from that we need not learn. IVS 210. Write down. IVS 210. That is intangible assets. That we need to know. Then you don't write IVS 220 is non-financial liabilities. IVS 300 is plant and equipment. Then you should note down IVS 400. It is real property interest. These 2 are from asset standards. We should know. So IVS asset standards. IVS, that is 102, 103, up to 105 we'll know. Now comes IVS asset standards. It includes 210 for intangible assets and 400 for real property interest. 410 is the development property. That is all for this in slides. I will share it soon as soon as the power comes today itself. Okay, thank you very much. This is for reporting writing. This is enough. So you know now. It's not very much. I mean, this is the report. By common sense, you can write all this. Question they frame. Some questions may come. I think this slide is sufficient for to answer this. Scope of work from IVS 101, basis of value is 104, something like that. I expect. That's all from report writing from my side. Slide share. So I will go to case studies now. Shall we do that? So that we can finish that. I have sent you a few questions in WhatsApp. Can you open the WhatsApp and can you please open the WhatsApp? WhatsApp. The first is the that I also want. You got it or not? That question.
So I can't hear you very well actually. You're cracking a little bit. I don't know if it's only
Okay.
me. Uh,
So
Sir, your voice
let's
is
see
cracking too much.
one by one. So 100 minus 2%, 90 divided by 5 is 19.6. Instead of that, I made the top divided by fraction is the calculation mistake. That will give you 98 90 because out of 2000, 1 lakh, 2% is 2%. So that 2% is to be deducted from the 100, 98% divided by how many years? That will give you 1 year, 19.6%. Now we'll go to the second question. A mobile phone was purchased for rupees 50,000. Its salvage value is 10,000. Total time used 600 hours. Use time is 20,000. What is the depreciation of the? This is almost 90%. And mobile phone purchase 5,000. So the price minus salvage value will give you into that depreciation percentage. Depreciation percentage will calculate as 200 hours, 200 hours we use for 60 hours. So 2060. So I give you 30,830 value. None of right, none of the above. Okay. Hello. So first
Yes, sir,
question, you
now
got
we
the
can
answer, no?
hear you.
Okay. It will go. I don't know. The mobile data it's not. I don't believe in it. Wi-Fi is the one. Okay, it is up to 3:30. There is a report. I mean, our electricity board has given a warning. Maintenance work is there. So at least half an hour we'll. Our time will go. Anyway, first question, you got the answer. Anybody got the answer for the first question? No? Hello? Hello?
Hello.
Yeah. I'm asking about the first question.
The first
Did you
in
see the first question?
WhatsApp, sir. So the first question WhatsApp.
Yes.
Okay. Yeah. Yes, sir. We got that.
The first step is wrong actually. That
The
is 200.
depreciation.
Yeah. I'll tell you. Property value is 1 lakh. Expected salvage value is 200. 2,000 for
2,000.
5 years. Yeah, for 5 years. So what you have to do is how many percentage? 2,000 divided by 1 lakh. That will give you 98%. So 2%, 100. Then you have to deduct it from 100 total price. 100 minus 2, 98%. Divided by 5. It's little confusing. I'll come to this
Correct.
later. So you got it now. 98 by 5. From 98 by 5 is it's correct. 19.6% value. Okay. Now the second question is very important. That we will see. A mobile phone was purchased for rupees 50,000. Its salvage value is 10,000. Total lifetime use is 60,000 hours. use time 20,000. What is the depreciation of the cell phone? So sure question. Please go through it. So that is, we know that purchase value is there, salvage value is there. So you deduct the salvage value. Then depreciation is 20,000 divided 60,000. Because total time is 60,000 and use time is 20,000. So it is depreciated. 20,000 by 60,000 will give you the depreciation. Salvage is already deducted as 10,000 here. So there is no need for multiplying by 90. 50 directly you are getting 40,000 into 60 by that will give you 33,333. So 13,333. So answer is none of the above. It is not mentioned, that value is not there, so you can write none of the above. So many questions, a few questions you can expect none of the above or both of the above, similar questions. Okay, so next one, this is clear now. This question you have to a little more, you take your own time to learn this. Any doubt you can ask, because I feel this is an important question. Anybody having doubt, you can ask me. Nobody is, no chat, nothing, no questions asked. So shall I go to the next question? Yeah. Yes, okay. Thank you, Tulsiramji. Participant can type in chat so that I can get the answers here. Okay. So next one, cost of acquisition is 800. 8,000. Sorry, 8,000 is the cost of acquisition. Salvage value is 1,000. Life of the machine is 3 years. Seeing this life of machine, this is not belongs to plant and machinery category. And we also can expect the same question. So only thing is whether you know for WV depreciation rate. Okay. So here what you have to do is you have to apply 50%. If it is 50%, the value will be 8,000 into 0.5 into 0.5 into 0.5. That will give you 1,000. That is the salvage value. See, life of machine is only 3 years, so multiply it by 3 times. Or you apply in the formula A is equal to P into 1 minus R by 100 raised to n. Same as linear method formula. If it is 25%, it is out of, see, the answer is already there. Salvage value is rupees 10,000. Life of the machine is 3 years. For written down value method, WDV method, what is the depreciation rate? So this is trial and error method only, it will work out. So you will get 50% means 100 minus 50. So other 50. So 25% means 100 minus 25, 75%. 66% means 0.34, 100 minus 66. D is choice is 100%. So 0, 0, 0. So these are the different depreciation for different lifespan. Okay, from which see that 1,000 is coming in the A. Can we go to question number 4? Okay, Ramji, thank you. Question number 4. The net income was reported as rupees 24,000 and the property sold for 3 lakh. What capitalization rate is applied to this sale? So net income is reported 24,000. Income, property was sold 3 lakh. So capitalization rate you have to calculate. What is the capitalization rate for this sale? So naturally, you know, very easy. 24,000 net income divided by total value sold, sale value, that is 3 lakh into 100, 8%. 8% is the capitalization. Okay, very simple. Next one, the age of the building is 20,000, 200 years. The life to 20 years. The life of the building is 40 years, half of it. The replacement cost of the building is 2018 is 500, 5,000. Oh my God. The salvage value is 500. Using straight line method, what is the depreciated rate? You simply, this is the most, what you call, easiest method. This question is especially for those who are in trouble for depreciation value and depreciated value, because see the depreciation rate that will give you 2,250. Depreciated rate is asked. Questions. See the question. What is depreciated rate? So depreciation rate is 2,750. How we got deducted is from 5,000. So this question, most of them will go mistake. 2,000. They will write 2,250. That is depreciation rate. As I told you, there are two rates: depreciation and depreciated. So such cases, see the figures are more or less same. So we tend to answer 2,250. No, you have to deduct it from 500. So 5,000, sorry, 5,000. So you will get depreciation rate as 2,750. You know how to find the depreciation. 5,000 minus 500. That is 10% of salvage value. Salvage value we already given the question 500 into 20 by 40. 20 is the age of the building, 40 is the lifespan. So that will give you 2250. Then depreciated, the question very important. The question is the important part of it, which is depreciated value, not depreciation rate. Depreciation rate is different, depreciation rate is different. So you got the depreciated rate by deducting it from the cost. So 5,000. Okay. Now next question. This is something very interesting from income method. Maybe they will ask. All these 10 questions are important. So that's why I just put it. It's repeated when almost all the IBB exam they are asking more or less this first 10 questions. A person seeks an amount of income of rupees 1,000 per annum from an investment. He wishes to be 8% return on his investment. What is the amount he has to invest? So in order to get 12,500 at the rate of 8,000, how much will be the amount to be invested? So amount you should get 1,000 rupees per annum. So it's very easy. 1,000 by 8 divided into 100, 12,500. Answer C. So let's go to the other slide. What would be the written down value of a machine purchased at the cost of 30,000 after 3 years, service life at 5% rate of depreciation? Read the question carefully. So 5% rate of depreciation. So 100 minus 5, 0.95. So multiply it continuously or use your mathematical formula. You will get 25,720. Check it out. If you want, you can calculate. Or both ways. Either this is a small number, better to multiply to 3 times. When it is 15 or 10 or 15, you have to go to apply the mathematical formula. Okay. Now, a machine was purchased 2 years back at a cost of rupees 4 lakh. Total life 20 years. Salvage value 10%. What is the depreciated present value after 2 years? See, here there is a twist. A machine was purchased 2 years back. What is the depreciation present value after 2 years? That means present value. Was purchased 2 years, value after 2 years. So present. You got my point? Okay. So let's solve it. Then you will understand. Depreciation percentage, 2 years they are taken, not 4 years. Don't add it. The see the framing of the question itself is a bit confusing. A machine was purchased 2 years back at a cost of 4 lakh. Total life is 20 years. Salvage value 10%. What is the depreciated present value after 2 years? After 2 years. Okay, so that is, don't add 2 plus 2 or any assumption you need not make. It is 2 years is the age. Purchased, it was purchased 2 years back. From that, we will get age 2 years. Or what is the depreciation present value after 2 years? Then also age is 2. So 2 is the age. Don't confuse it. People may write 4 years. So depreciation percentage is equal to 2 by 20 years is the total lifespan into 90. That is 100 minus 10. That is 90. 9%. So that is depreciation percentage. Now depreciated value is 100 minus 9, 0.91. 0.91 into 4 lakh will give you 3,64,000. Answer C is given. Okay, clear? Now let's go to next question. Work out NPV of a building having 20 years of age. What is NPV? Tell me, somebody. This type of question will come.
Sir, net present value?
What is NPV? Anybody can answer.
So is it the net present value?
Exactly. Having 20 years of. Exactly. I told you. Exactly. Very good. It's right. Right answer. Work out NPV of a building having 20 years age and 60 years of total life. Its replacement cost as on today is 4,30,000. Salvage value is 10%. Adopt SLM. Tell me what is SLM? So SLM, you know,
Salvage value?
who? No.
Oh, the slump. The slump. No.
Not slump. Slump test is different. Adopt SLM. Adopt. Yeah, Mr. Ramji has written straight line
Oh,
method.
straight value. Yeah. Straight.
Yeah, okay.
Line method.
Straight line method, yeah. So SLM, okay. NPV is net present value. So we got all the details. Depreciation percentage you directly find out. 20 years by 60 into 90, 30%. So the net present value is 100 minus 30, 0.7 percentage. So 0.7 into 4,30,000. You're directly getting the answer. See, 3,01,000. Okay. And today's last question. What is NPV by constant percentage method, linear method? Net present value by constant method. Replacement cost is 3,500, life 75 years, 75 years, age 15 years. See, I am repeating this. Constant depreciation method will give you depreciated value directly. Not depreciated value, not depreciation value or depreciation rate. Why? In the formula, depreciation rate is there, right? Depreciation rate in the formula itself R. So you need not find out it. It is given in the question. Straight line method directly give you depreciated rate. So depreciation rate per percentage only you have to find out depreciation rate. In such cases, depreciation linear method, I will tell you, depreciation method is easiest way to find out is 100 divided by lifespan. Write it down now. in straight line method or any other method, I mean, related problems, when depreciation percentage is not mentioned, in linear method, depreciation percentage is not mentioned, you just divide it 100 divided by expected life of building. So 100 divided by 75 is equal to 1.33. This is the most, what you say, most of the people do not know how to calculate R in linear method. I'm not telling about A or P, N or anything, R. The particular depreciation percentage in linear method is calculated by is equal to 100 divided by total span of life, 75. Yes, 100 by 75 will give you 1.33. Now you substitute in the formula. You will get that formula give you 0.818. If you want, you can do it 0.818. You use your scientific calculator. Those who are not familiar with scientific calculator, start using it from today, please. You have to be very careful and not very careful. Actually, it is solve this problem by scientific calculator. So you will get 0.818. No other method you cannot find 15 years. See, without raising to the power of 15, how can you solve this problem? Only calculator is the this thing option. So you got 2,860. 2,86,300. So that answer is the D. Okay. So this is an introduction to case studies. So based on this, we will solve any number of problems. Wait up to 15 minutes. If it is not there, I will inform you in the WhatsApp group that our class is over. Tomorrow we will continue. Okay. Please wait because my charge is also exhausting. We'll let the power supply come. Oh, that is also dead. Huh? Okay. So just wait for my confirmation. I'm taking a break for until I'll wait 10 or 15 minutes. Then we will go to slide sharing and all. I hope I'm Please wait for a sec. The power has come. Yeah. Okay. Let's start case study now. Slide sharing. Okay. Now we are in case studies. Okay. Can you hear me?
Yes, sir, we can.
So this is a few tips advised by my mentor, Sri Kanaka Sabhabari sir, for attempting these questions. Read it carefully and you'll get very good guidelines from this. Read the question carefully whether the expected answer is depreciation value and depreciated value. This I usually say from his experience, whatever he taught me, and I really useful for me also. I have made a mistake this one in first attempt, depreciation value and depreciated value. That mobile case and other one, no, 2250 and 2750. 1 mark, I lost by 0.25 mark in the first chance. So that 1 mark question has lost my entire this thing. So this is the first point that I wrote. Then you have to read historic cost, original cost, and intrinsic cost are different. You should understand this. Some cases they will provide original cost, sometimes historical cost, and sometimes intrinsic. All costs are different. The rate of depreciation to calculate written down value is prescribed by income tax department. This is written down value as per income tax department. Okay, that you use only for income tax purpose. Otherwise, go to your linear method formula. A is equal to P into 1 minus R by 100 raised to n. So this is income tax. I will give you the table. I have already given you the table. 5% for buildings, 10% for commercial building. So that they are directly giving income tax purpose. But here in question paper, I think they won't give the such table or such this thing. You cannot even assume also. So they will give you the question paper what is the depreciation rate, or you have to find out if total span of life is given 75. Okay, 100 by 75. That is your depreciation percentage. The data given in the question can be prepared before calculating the answer. So they will provide you white paper only. So you write whatever data in a paper, question paper, whatever data is given, you write it down. Before calculating, don't jump into the answer, please. This will lead you minus 2, see, otherwise plus 2 mark, or it will come down to minus 0.5. So very careful. You have to write the data systematically. You have to do it. Whether you know or you don't know, that is different. You write it down, then only you will find the difference when you work out. Even in your preparation time also, you do this. Read the question, write down the data. What are the questions you see? They ask. They may ask 6 questions plus 4 questions, something like that. 4 into 2, 8. Okay. 4 into 2, 8 plus 12. Okay, 20 marks. 12 plus 8. There are 2 case studies they will ask. One is 8 marks, one is 4 into 2. 4 questions carrying 2 marks. The other one is 6 questions carrying 2 marks. Then it will be, yes, correct, 20 marks. So read all the questions patiently before you write the data. There may be unnecessary data in questions. As I said, there is unnecessary data in questions. Sixth one, you can take a scientific calculator without memory to the whole. That is non-programmable. Book value and written down value are different. What is book value? Book value means the value shown in the deed. Original cost or historical cost, you can say. But that is applicable for land only. Whereas you have to calculate building depreciation. Depreciated original cost of the land plus depreciated value of the building will give you book value. Note it down. Nowhere else you will get this information. Book value is equal, because now banks are asking book value. So this is the thing. Land value in the date of purchase, maybe in 2 parent documents. That you have to check. So that is the book value of land. Then plus you have to fix a rate for building rate, depreciate it, then add land component and building component. That is book value. No change in land value. Written down value is different. Book value, and of course we know it. The formula for linear method and written down value method is same, but terminology is different. The cost inflation index is prescribed by CBDT. That is not that important as examination point of view. Cost inflation index, I told you, you have to convert in capital gains. That 2000 rate to 2020 or 2000 rate to 2016, whatever. So that conversion that depends on cost inflation of the economy. So that is to be considered. In profit method, the income and expense are to be calculated per annum. So never go for the question will come 6 months this much, 2 months expense this much. No business of per month. All you convert to annum per annum. I told you this. The salvage value is normally assumed as nil for insurance. Important point. Salvage value is normally assumed as nil. The 10% factor or 5% factor, whatever. Salvage value is not considered in insurance. In the apartment, in apartment, the common area percentage is not total common areas divided by total built up area. It is total common area divided by sum of all plinth areas of flats. So question will give you only plinth area only, so that you can calculate total plinth area. What is the difference between built up area and plinth area? Built up area includes so many other factors like common facilities and all. I'll give you a picture. I don't know whether it is there. You can easily learn it. What is the difference between common area, built up area, and super built up area? The super built up area is actually a word coined by some builders. It is not common in our engineering practice. Okay. Joint venture ratio is normally denoted as promoter is to landlord, not landlord is to promoter. Promoter is to landlord. While determining the depreciation percentage, don't assume any minimum percentage of say 10%. The age is 4 years, life is 60 years, salvage value is 10%. So 4 by 60 into 96%. Don't assume a minimum depreciation of 10%. So in this case, he has taken 10%. So you cannot assume in question papers. It should be given. Similarly, don't round off. Example, 10 by 20 by 10 into 100 is equal to 33.333%. Not 33% only. You are right at least 2 decimals, 33.33. Otherwise, there will be a big difference in large value properties. If it is very high value property, you can take even 4-digit. All depends on you. You know the mathematics. If 33% you take for a large value, high value property, and if you take 33 and 33.33, so it is lakhs. Gross it will 0.33. That means if it is more than say 100 crores and all, the value will be very much changed. 33 lakhs. So take you judge it. If it is low value like 30 lakhs or 40 lakhs or 50 lakhs, 2 digits is sufficient, 33.33. If you are very sure that your answer is correct, and if it is not there, totally in option, do not click anything. Get negative mark and get negative mark. So if you are not sure, don't take a chance. We have all have a tendency to take a question because our we know that we are actually see elimination process. Whatever you do, still you are not in doubt. Don't take it. Leave with the questions. Maximum questions, at least 30-40 questions you can leave, no problem. Because that won't attract minus mark at least. So out of these questions, if you leave 40 marks, means 40 marks is gone. That's all. Otherwise, you will fail at least 40. Any of these questions become minus 0.25. So don't take any 90 marks. The theory question may have a small twist somewhere. Read the question carefully, twice or thrice before proceeding with answering. Keep this as guidelines from a Mahaguru, really speaking. So, I will tell about Sri Kanaka Sabhavati sir. He is the man who got so much disciples. He called them disciple students or whatever. So loyal to him. He is loyal to the even any questions we can send to him, doubts. He will clarify. Give us in any case, he will reply. So I will give you his what called mail ID. He has written so many books. I have a good collection of it. Try to get maximum books from him. He will conduct classes, so many MCQs, so many question papers. So well experienced man. A leader of such caliber is very rare, and his mentor is actually R.K. Gandhi. Try to get that book also. Now it is, I think they published the new one. Old one is with me. The new revised one is also already published. R.K. Gandhi. Then Ashok Nain. Some of the names I can mention for further study. Ashok Nain. Then comes Shamal Datta. If you want, you can join the FB group. Facebook group is there for asking doubts. There are many senior values in the group. Fortunately or unfortunately, I am the admin of that group. So many questions you can ask there if you are in doubt. If my answer is wrong, there are people to correct me also. So we created a group there. Mastering Real Estate Valuation. Shamans Datta. This book. This is authored by him. Very interesting book. All the books are actually interesting, like a detective novel. Their experiences, everything will be there. It's a nice book. You can even order, or I can give you whatever books you need. You can tell me, I will get it. No problem. So that is for further studies. These are the main authors, which I then one Gobinatha Rao is from Andhra. He is also now one more guy person who I know him personally. His name is Mahendra Kurkule. He has written a book on income fetching method only. So that is, I didn't get that book. I bought his taxation book only. He was a divisional officer for income tax. So he published only one book on taxation. Now he published a book on income tax. He is a poet also. I attended his few classes. He starts with his own poetry, and it's all good. He published so many poetry also, poems. So there are so many five or six people whose books is a treasure for you, a long time. So let's go to other point. Now you want interested in those things. You just want to pass the exam. That's all. It is enough. But if you want more studies, uh, excuse me, this is an important call. I will come back. So sorry for the interruption. It was a very urgent call. Sorry, sorry, apologies. If you are very sure about the answer, correct answer, if not totally negative. So next one, the theory question may have a small twist. As I said, read the question carefully twice or thrice before proceeding the answer. That's not moving. Yeah. Stuck. Tips while choosing options. So there is some tips. Net income is rupees 24,000. Rate of return 12%. The YP is, that means, see, this whenever you see this 12%, YP is 8.33. This is a general question everywhere. What is the capitalized value? Options given are 2,000, 3,000, 2.5, 3.5 lakhs. So let us say net income is 24,000 given. Rate of return 12% is given. So capitalized value naturally is 24,000 divided by 8.33. It will give you 2 lakh. That is option is A. It can be worked out like this. Another way of working out this. Net income is equal to 24,000. YP is 8.33. Then when you multiply with 8.33, you will get near to 2 lakh. If you put more threes, you will get 2 lakhs. This is 199, 1 lakh 99,902. This is the difference between a decimal place because of this answer. So the answer is not there in the option given. On such occasion, you can choose 2 lakh. Select A. So whenever, whatever method you do the job, solution, go to the nearest. If it is very near, so that is that has to be taken care of in the examination. This point. Then problem 2. The age of the building is 20 years. The life is 60 years. Assuming a scrap value of 10%, determine the percentage depreciation percentage. Here they are asking only depreciation percentage. So we know that 20 years they were 60, 90 minus 100, all those things. So let us see. Calculation 20 by age is 20, life is 60, salvage is 10%. This is mentioned as scrap, which is not right. Neglecting this wrong terminology. Actually, the scrap, I told you, no, first day. Scrap value and salvage value is different. But unfortunately, I'll tell you, some question papers not only make terminology wrong, sometimes grammatical mistakes are there, sometimes wrong words are used. So a bit confusing. So terminology, forget about it. We know that it is meant for salvage value, not scrap value. What is the difference of salvage and scrap value? You know it. Scrap is scrap. You know, whatever I told that example, like your plastic bottles, newspapers, we sell it no for scrap value. Whereas salvage value has got a much higher value you will get. So it is not. So depreciation is equal to 20 by 60 into 100 by 10. You will get 30%. This answer is not there in the option given. See, 30% is not given. In that case, what you will do? You are confident that your answer 30 is perfect. No other answer is possible to do not trick any option. Leave it as it is. It is a mistake by the examiner. If you tick any option, you will receive negative mark. Please remember. So don't tick anything. Even 33 and 30, it is there no. 33% is there given, but don't go for it. It is 30, exactly 30 you will get, because there is not even decimal places. It gives you a whole number 20 by 60 into 90 will give you a whole number 30. No decimal places are there. So next one, problem 3. This is a question connected with insurance. Age of building is 15 years. Life is 60 years. What is the depreciation? Tell me, who can tell this answer? Just I pointed out one point before. Remember it, calculate. Yeah, Tursagamji is correct. 15 by 60, no salvage value is taken. That is 25%. Yes, return. Very good. So salvage value is 15 by 60. Leave it. Leave it. So here salvage value is 25%. Why? No, I mean, sorry, depreciation is 25% because we are not taking salvage value for insurance. Am I correct? 15 by 60. That will give you 25% only. These are all small tips I am just want to give you while answering the question. Now, 50, sorry, 22.5. Where if the above problem doesn't assume salvage value 10, 20%, the insurance salvage value is generally not concerned. The right calculation is 15 by, he has deducted first one, 100 minus 90 he has taken. Don't take it. Give directly 15 by 60. Depreciation is 25%. So option is B. No salvage value should be taken. Now some useful information. Depreciation percent by straight line method. Age of the building by total lifespan into 100 minus salvage. Depreciation by linear method. A is equal to P into 1 minus R by 100 raised to n. What is a depreciated value? In linear method, we are directly getting depreciated value. P is replacement value and R is rate of depreciation. Rate of depreciation, you know how to find it out. Either you divide it by 100 by total lifespan. Otherwise, the question paper itself it will give. N is age of building. If 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 life of building is 60 years, the rate of depreciation R is equal to 100 by 60, right? This is in linear method. 100 by life of span building. So 1.667. Replacement value minus depreciation value is equal to depreciated value. Not in this case, okay? Here you have to, maybe they will ask depreciation value. Then you can use, you directly get depreciated value from the formula. Replacement value minus depreciated value will give you depreciation value. Whereas in all other cases, we are getting depreciation value, then depreciated value. Here you will get it depreciated value first. Then again for formula for how the same formula is using for written down value method. So A is equal to P minus R raised to n. A is written down value. At P is here, see, we use the word historic cost, P. Whereas here we use replacement value. No much difference. You can use historic cost. R is equal to rate of depreciation of building as prescribed by income tax department. See, this is a written down value in income tax department, but in our IBBA, you have to find it out. Or in question paper, it will be provided. Normally, for purpose of insurance, the salvage value is assumed as nil. Now, FSI, you all know total built-up area divided by land area. So generally, we engineers use total plinth area divided by land area. So built-up area is you can consider as plinth area. What is UDS? Undivided share. Super built-up area, undivided share, super built-up area divided by FSI. That is the UDS. super built-up area or built-up area divided by FSI gives you UDS. Please note down this formula. Undivided share. What is undivided share in an apartment? See, undivided share is the portion of land after deducting all the common amenities, all the flat split area, everything. So we have a plot in which an apartment is constructed. So undivided share is a land portion which we are. It is an abstract concept. You cannot show this is my undivided share. No, this is proportionately divided. Like you have 1,000 square feet flat. The other guy is 2,000 square feet flat. Suppose 1,000 square feet flat owner gets 200 square feet, whereas the 2,000 man will get 4,000, double. So that is UDS of the land is calculated on the basis of whatever your flat split area. Depends on bigger the flat, bigger the UDS. UDS is undivided share land. It is a land. When it will be useful for this UDS, you cannot market. You cannot say I have if it is a big plot and apartment, I have a UDF share of say around 5,000 square meter. You can take it. You can sell it. No way, because it is non-identifiable. It is given as a concept that you owe 5,000 square meter there. Where it is not a issue. It is not at all coming to the picture. It is that's why I call it abstract. It's not giving any exact picture, exact location of that UDS. Where then you may ask, what is the use if I cannot sell my land portion? How can I? What is the use? Yes, this is useful when suppose your building is taken away by land acquisition. So in that case, you will get the price of the UDS. Everybody, all the flat owners will get proportionate UDS. They will give the market value. You got my point. Undivided share. That concept. Can you follow me? Always better to see the chat. Only one person is giving me answer. No, sir. Okay. Tulsiramji, in apartment cases, now it is yes. You understood this long back. Bit back. Okay, fine. Thank you. So in apartment cases, UDS means undivided share of land. That is not you cannot show it where it is. No, it's a concept only. Not concept. You have the right also. When land acquisition comes, you will get that share value of that particular area. That's all. You cannot sell UDS. Okay. Okay. Now, how to find UDS? Super built-up area divided by FSI. Why you are dividing it by FSI? Because it is related to plot. So total plinth area by plot area is equal to into percentage of FSI. So when you divide it by super built-up area by FSI, floor space index, it will give you the total plot area. Vice versa, mathematics. I hope you follow this. So that is FSI divided by FSI. UDS undivided share is equal to super built-up area divided by FSI. Super built-up area means everything is included. Your gym, health center, whatever common. Will buyers get UDS by default, or it has to mention the registration date? It has to be mentioned the registration date. It has to be, but you should know how to calculate it. Most of the people are not calculating this one properly. As an engineer valuer, you can easily calculate. You take super built up area of the whole building. FSI, you know, from the government department or whatever FSI he is used to 2.5 or 1.75, whatever. You divide it by the FSI, you will get undivided share of land. Okay. It is not by default. It has to mention, of course, it is by default also, but it should be mentioned in your agreement with the builder. You dare share. Okay. Okay, fine. So now we will go to case study 1. Building areas 3,200 square feet. Whenever you get a question, first tip you remember, just write it in a white paper, whatever they are given. Age is 30 years, age 30 years, life 80 years, salvage, here it is 20%. Replacement rate 2,200 per square feet, that is plinth area rate. This is called plinth area rate. So replacement rate is 2,200. What is the depreciation value of the building by straight line method? Can anybody solve it? Easiest question. This kind of questions, if comes, it is your luck. So how will you find depreciation? Okay, I will do it. Say age of the building, how much? 30. Life of the building, 80. 30 by 80. Salvage value is 20%. 100 minus 20. So I am going to calculate here. 30. You have to, because then we will check the answer. That don't think that answer is there, so that I don't want. Do it yourself. Then only you will learn it. Otherwise, in classroom you cannot. So 30 is the age divided by 80. That will give you 0.375 minus 80. 100 minus 20, 80. So you got 30% is depreciated. Depreciation percentage. Depreciation value, whereas depreciation value they are asking. So 0.3, right? 0.3 into what is replacement rate? 2,200 into what is building area? 3,200. So if to construct 3,200 square feet area, you spend 2,200. That is the replacement value. So multiply these two. 2,300 into 3,200. So out of which you take 0.3 percentage, 30 percentage. That is multiplied by 3. So you will get 70, 40,000. Okay, 70 lakhs, 40,000. So let's go to the answer now. See, they got 30% as we see depreciation age. Then depreciation value SLM is same method 0.3 into multiplication of the building replacement rate is found. No, the replacement value is equal to 3,200 into 2020. Okay, fine. The option is A, right? Great. Oh, you are doing all the calculations. Very good. Ramji, I can see. I opened your chat box so that I can see now. Okay, fine. They are not asked depreciated value. Again, if you want to see the depreciated value from total value, you deduct that depreciation portion. So that is depreciated value. Okay. So now case study 2. Total extent of a site 40,000 square feet. Total built up area of the building is 20,000 square feet. What is the FSI? Tell me FSI. How to calculate FSI now? What is formula for a FSI? Yeah, he is very faster than us. Okay, he got the answer. Okay. Anyway, let us try. Total plinth area divided by plot area into 100. So 20,000 divided by 40,000. That is half. 0.5. Right? So he got the answer. Right. Okay. DUA. You're familiar with this guy. Did you attend any class, Mr. Tulasiram ji? You are giving right answers. Okay. Hmm. So 0.5 here. How they worked out? Total built up area divided by area of the site. We have architects, we have so many engineers here. These are all simple questions. So case study 3. 4 years back, Mr. X bought a plot of rupees 50 lakhs. In the same year, he constructed an industrial building for 25 lakhs. Life of the structure is 50 years. Replacement value of building is 40 lakhs. So plot value you have 50 lakhs. Industrial building purchased is constructed for rupees 25 lakhs. Age lifespan is 50 years. Replacement value of the building is 40 lakhs. Though he constructed 25 lakh, now it is replacement value is given as 40,000. So let's see. What is the depreciated value of the building by constant percentage method? So here we are going to get constant relay method directly depreciated value. So replacement cost is 40,000, 40 lakhs. Rate of depreciation, as I told you, if it is not given, 100 divided by lifespan, 2%. N is equal to 4 years. Question asked for 4 years. What is that question? 4 years. Come. What is 4? Where is that 4? Anybody knows? Even I don't know. 4 years back. It is written here. 4 years back. Sorry. 4 years back. So 4. N is equal to 4. So apply the formula. You will get 36 lakh 89,600. So we have an option of A somewhere here. A. So option A is right. Now I would like to know any doubt in this. There are 6 or 4 participants. Sharma ji, is it clear? Sharma ji is not clear, right? What about architect? Yoshan architect are clear. Is it clear? I cannot hear you.
Hello. So got it, sir.
Yeah, you got the idea, no? This one?
Yeah,
Very
got
clear.
it.
Yeah,
Yes, sir.
thank you. So we'll go to next. Take okay. Question number 2. What is historic cost? Okay, from that question, you read that question, you have to find historic cost. It is replacement value of as on the date of valuation. It is the sorry, this is options for historic cost. A is wrong. It is the replacement value as on the date of valuation. Wrong. It is the amount spent both for plot and building. Not correct. It is depreciated value of the property as on date of valuation. No. The amount invested by the owner for constructing his building. This is the historic cost. So the actual amount spent by the builder or investor, that is historic cost. The historic cost is the amount spent by the owner at the time of construction. Just write down this. Historic cost is the amount spent by the owner at the time of construction. In building case, it is building. Historic cost is the amount spent by the owner at the time of construction. So now we'll go to question 3. I think this is from the same question. What is the written down value of the building for balance sheet purpose? See, usually written down value is used by chartered accountants and all. So balance sheet purpose, they will use written down value. The depreciation as per income tax assumed as 10%. So here they are given 10% income tax. It's like maybe a commercial property. So how will you calculate 10%? So 0.9, 0.9. How many years? 4 years. Multiply 4 times, or you use that formula. 4 times multiplied. Using formula, we got some value, 16,400. This will be the same value as when we use the formula. Can I have a pen to move this? From slider, making lines and all. Let's see something. Okay, fine. So this is the return on value method. Historic cost is given, rate of depreciation is given, age is given, formula is we know. So that is the answer. Or you multiply 25,000 into 0.9 times. That's all. Very simple. Now question 4. What is the book value of the property? See, we are trying to get all the difference between historical cost, linear, if you use constant depreciation method, linear method, if you use depreciation method. Now we are giving book value. What is the book value? See, book value of the plot is given. I told you, this is most important part, book value. Many people do not know how to calculate book value. Book value of the plot is given 50 lakhs. Now written down value as on date, they are found 16,040, 16 lakhs 40,000. Add it together. That is the book value. I hope it is very clear. It should be clear for you for future also. Then only you can work out book value. Now banks are asking book value. So if you have the details, go for it. Otherwise, just write details not available. If you are a lazy person and you don't want to read that deed, you know, the deeds are written in a particular way. You cannot find easily the values. So if you are in doubt, don't use it. Otherwise, try to read it. Advocates or document writers can very well understand. Read this from the in lack of, usually in legal wordings are there, legal framing are there. So it is difficult for us to find out. Luckily, my wife is an advocate, and I used to show her, show me the land value here. So she will find out some other way. So she will give me this value. So book value of the plot is 50 lakhs. Return on value, we have got it. So total book value is add together. We'll go slowly, better. You digest whatever we have learned by this question. We know how to find from the question number 1, depreciated value by constant method. This is only thing you have to remember is rate of depreciation is 100 by 50. How to calculate R in constant method. So that you remember. Now, historical, what is historic cost? Historic cost is the amount spent by the owner at the time of construction. So, third one, what is written down value of the building, balance sheet purpose? That also we learned. It is the written down 4 years. 10% means 0.9. 0.9 into 0.9 into 0.9. Yep, the formula also give you 0.9 raised to 4. So you got this one also. Now, what is book value? That also we learned. This much, I think you have to know basics. So let's go to next question. This is case study. I think this case studies have appeared recently. The same case study has appeared uh, recently. Okay. Plotting scheme method. This is where you are using plotting scheme. We discussed plotting scheme method, hypothetical scheme method, or method we have discussed it. That's why I told you that time. You won't understand by saying or explaining. When you do the case study, you will understand clearly. Whereas when whatever how many time I explain to you, that doesn't matter. It won't be effective when you do this. What you call uh, case study. It will be very clear. This is. Huh? So, can you just draw this picture so that I can change the slide? Otherwise, it is difficult for you to find out from where this got, from where this got. I will give you some idea. This is a road plot. Plotting scheme is applied. Wait a minute before drawing. Listen me. This is a road. Frontage. First portion is frontage. Second portion is rear to it. The third portion is rear to it. So they have given in IBBI. They will give what is front portion depth 50, 200, 350. So frontage is 200 meters. Total is 600 meters. So for first portion, you have to take, here it is given, question, everything is given. See, in a situation, this is a land only. You cannot use plotting scheme in building. You cannot cut the belting method and all those things. It is for large lands, large portion of land, rectangular. Probably you can convert, it's not exactly rectangular, it's a hypothetical way, you know, so to find out the value. So it may be irregular bit, recessions may be there, corners will be there, so don't mind about it. We know the area to calculate. Means first portion, this much, second portion, this much, third portion, whatever in records, you put it in third portion. Okay. So accordingly, you adjust the distance. This is the reverse, the method of doing things. Reverse mathematics. When you know the area and you have to stick upon first and second portion, okay, well and good. We have thumb rules. The third portion, you may not get exactly. So, in order to make the straight line 600 meters, the remaining area you put in third plot. Practical. I'm telling you the practical. So that this 600 maybe 605, 705 or whatever. Because that's why some triangles may be there, no, some portions that's called recessions, a triangular portion, some corners. So total area may be different than a regular rectangular. So that is anyway, that is practical side I'm telling you. But here you can calculate. It is given. Small size road plots are available at a rate of 600 per square meter. So frontage always give 100%. So available nearby locality. So same portion, front portion you can take from whatever the small plot is taken. So it is divided. 200 is this thing, and the subject plot is sufficiently large, which can be divided into several small size plots. That most probably three is enough. Fourth plot I never come across. First portion, second portion, third portion. The subject plot is sufficiently large, which can be divided into several small plots. The depth of the plot is 600 meters, considerably 600 depth, the total depth. Considerably more than as compared to the frontage. 200 is the frontage, so 600 is the depth. So it's a depth of the plot is more, so that you can use plotting scheme method. The guideline rate is 300 square meter. Unit market rate is rupees 600 square meter. Can you tell me here one unnecessary data is given? Who can tell? this question, there is one unnecessary data, not required for calculation purpose. Somebody has to answer. Read the question. In a situation, subject land is located in such a place where instead of sale, large plots is locally are not available. So large plot, no comparables are available. So you cannot assume anything. Small size, whereas small size plots nearby, maybe opposite the road, a small plot is a 10, say, 400 square meter. It fetches rupees 600. So for first portion, we can give that one, that the value itself. Plot is located developing town where demand for housing site exists. The subject land is not surrounded by agricultural lands. These are not required at all. The subject land is not surrounded by nothing to do with us. You got my point. There's nothing to do with us. The subject land is not surrounded by agricultural land. The subject plot is of sufficiently large size, which can be divided into several size of plots. Yes, good one. The depth of the plot also 600 meters, good considerably when compared to 200 meters of frontage. So guideline rate is 300 square meter, and unit market rate is 600. One more unnecessary data is there. One is surrounded by agricultural land. We need not know. The other one is guideline rate. We don't use guideline rate. That is stamp duty rate. Guideline rate means stamp duty rate. To calculate market value, you need not consider it at all. I hope you got my point. Stamp duty rate is published by government to register a property. That's all. Whereas fair market value, we take only market value. If we take guideline value, what is the use of valuers? There is no job for valuers. So this profession is in peril in that case. So we have to find out market value. That is 600 square meter is given. So now go to the picture again. Can you move this? I cannot read that. Okay. First portion, you took at 50 meter inside. A small 50 meter, 200 by 50. That is given 600 full market value. That portion, that means 200 into 50, 1000 square meter will give you 1000 into 600, 60,000 or something. Yeah, okay. Then how they took second portion? They are taken 200. From where they got it? Actually, this second plot should be 1.5 times. Whereas they take 200. Okay, fine. Not 1.5. Okay, fine. Forget about everything. This is take the value 60%. Second belt is they are taken 60% of 300. So that is 360. You cannot, because I am not moving the slide because you cannot understand that. Just watch the sketch. First portion is 100%. That is 600. Second portion is 60% of 600. It is not a rule. In question paper, they will give value of second plot, value of third plot, everything will be given. Then this depth also. First plot, this 50 meter, second plot 200 meter. The rest only they will write. The rest portion is third belt. But they will give 600. So add these two, 250 minus 600, then you will get 350. This is the way in IBBA question will be framed. They won't see, this is all assumptions. 100%, 60% of this value, this 50, the next rectangle, they took 50%. Here also 50 is the depth. Second portion 200 is the depth. Third portion 350. These kind of these are all nearby assumption to learn the subject. There is no space for me to write here. This is for learning purpose. In IBBA question paper, if this case study comes, they will give you all the details. You got my point? I hope so. Only thing you have to draw this. Then you calculate. This is the easiest question. I pray this question may come for your at least 4 marks. Say that 4 questions, 6 questions. If it comes, you will score 100 marks. So I'm going to change the slide. Just see, you by heart the slide now, sketch now. Okay. You have figure in your mind. Agricultural land as well as Tulsiramji, that guideline rate also, it is not required. So let's go to the next slide. Question 1. What is the value of first portion of the roadside if the plot is considered 50 meters depth in? Okay, here they are given 50 meter in depth. Okay, in sketch already marked 50. Afterwards, they might have, you can do it. Okay, consider 50 meters in depth, assuming the basic rate. Assuming the basic rate. So here they may confuse you. Assuming the basic rate means it is see, let us see how they calculate it. 50 meters into 200, 100 square meter. Unit rate, only market value is considered 600. Not assume the, see how they confuse the basic rate. They use the word basic rate. So naturally you go for 300. Oh, this may be the 300 may be the basic rate. No, always take fair market value. If basic rate is taken, as I told you, you or me, jobless. So don't go for it. It is 600. Okay. You got the first one clear, no? First question. Any doubt in first? This is the first one. Very easy. I want somebody to reply, please. Because we have so much time, because tomorrow also case studies. See, generally in case studies, we are go for bigger questions first. So here I am trying to, I adjusted the time in such a way that report write, everything is finished now. I can give you an introduction to case study. So tomorrow you will be in a position to, because this carries 20 marks. You have to be familiar with all the wordings, all the concept here. So architect or where are the others? Hello, I am audible.
Yes, sir.
Okay, the first question is clear, Mrs. Dar. Miss Dar, she is sleeping. Class.
Yes, sir.
You're not sleeping, no?
No, sir.
Okay, concentrate because this carries 20 marks. So this portion is clear. Jain sir, both दिन से आपका आवाज ही नहीं दे, आवाज ही नहीं आता. What happened? You are so involved in these questions. Is it clear, no?
No.
If you want, I can repeat many. I can repeat. We have enough time. हाँ? Jain साहब बोलिए. You want repetition?
Yes, sir. I understand. Yes, sir. Clear.
I want to repeat it. और एक बार बोलने का है क्या?
No, sir.
It's clear, no?
Yes, sir. I clear.
Yeah. Be clear. Be clear. These
No,
are
sir.
all sure questions.
Clear. I got it.
Yeah. ये तो बहुत एकदम
No, sir.
important questions. We are going through a. Yeah, this is critical. We are in a critical stage now. This is the most critical part
Yes,
of the case studies. Not only case studies, but other words used, the way what we are going to do, whatever we studied, everything comes here. So do not have any doubt. If you have a single, minute doubt, please ask. Then only we will go forward. All the participants I request, whenever you are in doubt, please just tell me. I will repeat it at any number of time, no problem. Because this is very basics, basics in the sense we need to know. Otherwise, you cannot, even attempt IBBA. This is basic structure of the questions. So be careful, concentrate on it. Don't sleep. I cannot see you. So if I can see only myself. Nobody is in video on. Okay, fine, no problem. So we'll go to second question. Next question. Slide. So from the same sketch, second question. What is the value of second portion of from roadside if the plot is considered as 200 meters in depth and rate considered 40% lesser than first one? See, the question will give you this thing. So same, see, frontage never constant for all the plots. Frontage different, that 200, no, that is constant. Only variable is that depth, 60, 50, 200, 350, like that. So here it is given 200, then it's a square plot, it becomes a square plot. So 200 by 200. Rate is 40% lesser. That is how much is the cost? 600 square meter, 600 rupees per square meter. 40% lesser. That means 60. Take 60%. 3 into 60, 360. 360 rupees 360 per cent. Here they are using cent. Okay. I don't think you are. What? Square meter. 40%. Oh. You have to, okay. Where is that? Question number 1, 2, 3. Okay. This is a single word. Okay, we'll correct it later. Okay, correct it now. It is confusing because percent per square feet are different. This is just 40%. Better to write like this. If at all, nobody should be in doubt. Okay, write it percentage. Okay. So now let us see how they calculated. You got the question now, very clear. Solution. Size of the second plot is 200 by 200. Area is 40,000 square meter. Unit rate is 40% less than first portion. So 0.6 into 600. First portion we have taken as a value of 600 because the small sites are available for 600. So it becomes a small, considering a small plot now. 200 into 50 first portion. So second portion is 200. So 0.6%, 360. Value of second portion is 40,000 area into price, 360. Very easy. You got 1C, 1.44C, right? 1 crore 44 lakhs. So option B is the. Okay, it's clear. Option
Okay,
B.
sir.
Yeah. So B. Then we'll go to question 3. What is the value of third portion from the roadside if the plot is considered as rest of the plot? See, rest of the plot. So that means we know that it is totally 600. So it's a simple 8th class arithmetic. Rest of the plot is how much? 600 minus 50, 20, 50, 200 minus 50. So
350.
yeah, that's all. The rest of the plot is considered as the rest of the plot. Rate consider 50% less than the second one. Always take precaution. 50% lesser than second one, not first one. Okay, second one is how
Answer
much?
C.
360. So half of it.
Answer is C.
Sometimes what people do, okay, answer is C. Okay, sometimes what they will jump into the conclusion that 50% lesser than the first plot, so they will take 300 rate. Don't do that.
180.
Okay, fine. Okay. So you take from the first portion, no? First time आप जो जवाब दिया ना first time. Okay, ठीक है. Next one.
Yes.
Yeah, I know, because this mistake will make. See the question, the second one in rupees. So 50% less than second one, not less than first one. So take the 360 figure. So let us see how they solve. Total depth 600 meter. First portion plus second portion is 20 plus 250. Depth of the third portion. This is, my daughter, third class student. 600 minus 250, 350 meter. Size of the plot. That also algebra. Very simple geometry. 350 into 200. So total area of third portion 70,000 square meter. Unit rate 50% less than second portion. So 0.5 into 360, 180. Multiply it by area. You will get 1.26 C. Clear. See, this type of question comes, you're lucky. Really. Because I have seen one or two very difficult questions. It is up to that questions will confuse you. Like these are all straight questions. Only thing you have to read the question carefully here. Okay. Now, question number 4. What is the value of entire land? Common sense. Add all together. Portion A, portion 1, portion 2, portion 3. Okay. So you will get 3.36. 3 crore 30 lakhs. Okay. Total land value. First portion add, second portion add, third portion. Adding all together, you will get 3.3 C, 30 C. Okay. So I'm going for next question. Which method of valuation is accepted in case of huge plot area to be valued? Okay, you can answer it now because it started with the name plotting scheme method. This is called plotting scheme method, or you can use it belting method. There are two terms. Write down, please. This is called plotting scheme method or belting method. This is belt. The portions are divided into belts. First belt, second belt, third belt. So you can write it down. Plotting scheme method or belting method. Belting. BELTI. Belting method. Others are sales comparison. We are not taken any sales comparison. Though we took one instance. You remember? One sale comparison we made. What is that? For smaller pot, it is 600 square meter. So you took first portion as 600. That is actually you got by sale comparison. But this huge plot area, this value can valued by plot scheming method. This is the appropriate way. Whereas sale comparison also a part of it, just a part of it. I think you got the idea. Net present value method. In PV, we never used that word here. Transfer of oh my God, TDR also given. Nothing to do with TDR. So huge plot can be valued by plotting scheme method. What is that? Yeah, okay. Yes, he's writing. He's always right. Yes, I think you can write, you can try even within 1 or 2 weeks IBBA exam. Okay. I know most of you are those who are silent also. They are all caliber. I know they can also write. So we are going to case study 5. This also appeared in the business. Case study portion question. All appeared. So your computer will select randomly. That one is good. You try to understand the question. It will take at least 5 minutes to give. 5 or even 8 to 10. Just read the question properly and I will give you the answer. I'll come now. So you just data. See, the data is given on the side. You just go through the question, and compare it with data. At that time, I will come. So So I hope you got the data correct. Extent of plot 100 square meter. Year of purchase of plot 1987. Purchased amount 30 lakhs. Year of new construction 1988. Plinth area of ground floor 300 square meter. Built up area of the first floor 100 square meter. Cost of building GF plus FF. It is 14 lakhs. Replacement cost 300. Prevalent land rate 60,000. Age of the building 30 years. Life of the building 60 years. Salvage assumed. These are the data given in the question. Is there any doubt? This is the way you should start before looking at into the options. Whatever data you have, you just write it down in a white paper. Now we will go to questions. What happened? You didn't get, Darji, what happened? You didn't get the question correct, data correct?
No, no, I got it, sir. You said to get on. Yeah, I don't exactly
No.
remember.
Yeah, this data is okay, no?
Yes.
So yeah, okay. Then why salvage value 10%? There is that. Yes, very good question. Okay, consider it as given in the case. Okay. Okay, question. Please excuse me for that mistake. I thought it will come in next time. It is. You can put it here. Salvage value in the case study itself. So let's go to the next question. Question. Okay, the very good question. You are keenly looking into the question that means. So salvage value assumed is 10%. Sometimes I will do that. Okay, 10%. I have to convince you, no? My mistakes. So what will be the depreciation amount of the bungalow by adopting SLM of depreciation considering the scrap value 10%? In any case, here they are given. Again, wrong nomenclature scrap value. Or okay, let's go straight away. Go to the calculation. It is very clear. Total built-up area 400. Replacement rate 400 into 30,000. It is given. Data in your paper is with you. The data 30,000 per square meter. Replacement value multiply it. So 1.2 C. Age of the building. Look at your paper with you 30 years. Life of building 60 years. Salvage value 10%. Depreciation percentage is equal to 30 divided by 80 into 90, 45%. So 45%. So depreciation amount, not depreciated. Again, I am reminding you. It is depreciation amount is asked. So directly multiply by 0.45 into 1.2 C. That will give you 54,000. Replacement value into 0.45. So we'll go to next question. What will be the depreciation amount of the bungalow by adopting constant percentage method of depreciation? So here they are asking to do the same thing, depreciation amount by constant percentage method. So what you are going to do it? So when you do it by constant percent method, you will get depreciated value. Don't confuse. The question is depreciation amount. So you have to deduct it from replacement cost. So that will be the answer. Check the question once again. What will be the depreciation amount of the bungalow by adopting constant percentage method? Here I am saying repeatedly, constant percentage method will give you depreciated value, not depreciation value. So let us see. 60 years. So rate of depreciation 100 by 60, 1.66. Apply the formula. You will get depreciated value. This is wrong. No. Here 1 minus P into 1 minus. Otherwise, you won't take 1 minus. So that means already deducted. Okay, fine. I hope you understand this. Please. Why we are taking this as depreciation amount, not depreciated amount? We already P into 1 is equal to, you know it, 1200 into 1200. Then minusing the depreciated value. So you are getting directly. If you use this, if you want to remember this, okay, fine, good and fine. Otherwise, find out depreciated value, deduct it from 1200. You will get same answer. Is there any doubt? Okay, fine. We'll go ahead. This is the thing. Only thing is we are getting directly depreciated value if you use P into 1 minus R raised to R by 100 raised to N. Then you have to deduct it from replacement cost again. That is what they have done in the formula. P into 1 minus the rest of the equation. So already P is deducting from that equation. So depreciation amount is directly. Don't confuse it. I hope you can go directly to depreciated value, then minus it from replacement cost. That will be better, because otherwise this will confuse you. So many formula. So don't do that. Only one formula you have to remember in this depreciation. 1 minus and all, forget it. This is for easy procedure. I just wrote it. So better you go by P into 1 minus R by 100 raised to N. You find out depreciated value, then depreciation you can minus it. In any case, that depends on you, your comfort. Okay. Now question number 3. What will be the market value of the land at present? Land, it is only we are concerned about land. Extent of plot is given. How much? 100 square meter. Prevalent market rate also given, 60,000. See, you can compare it with your data. That's why I ask you to put it everything in a white paper. Then it is easier for you, and work out it also. So you will be accustomed with it. Easier to answer the questions in exam. So multiply both of them. That will give you the land area. Very simple. That will give you the market rate. I think it is 60. It's close. So 60, yeah, exactly, Ramji. Okay. Now question number 4. Let's see. What will be the total market value of the bungalow property for the bank non-purpose? Total market value of the bungalow property. You know land value. You know depreciated land value. Everything is with you. Okay, depreciated land value is 0.45. It was depreciation is 4.45. The depreciated value will be 0.55. So adding together, you will get market value 6.66 C. Correct? Just look at the slide and make sure. So in first question we found depreciation 45%, 0.45. So depreciated value is minus 100, 0.55. So you got the answer. Okay. Next question. What is the balance economic life of the building? Balance economic life, how much? It is given, no, 30 years is over. Total is 60 years. Balance auto 30 years. Right? Clear? Very easy question, but only thing is economic life, all those things. See, when you see this type of questions, you will get, see, a bit confusion will be there. But mathematics, if you look through a mathematician's eye, it is so simple. Total lifespan is 60. Age of the building is 30. So remaining economic life is 60 minus 30, 30 years. Okay. Now, question number 6. Which of the following will not be considered for the estimation of present market value of the above property? Which of the, we will see one by one. Present market value, yes, depreciation is to be considered. Replacement cost is to be considered. Current land is considered. Economic obsolescence is not considered. Yes. So economic obsolescence is not considered. Option B. Okay. These are the questions which appears in IBB sometimes. Sometimes I use only the word. I am not sure now, but it can come. Okay. So let's go to next case study. A few years back, Mr. X purchased a vacant residential plot of 2,200 square meter for rupees 465, 4.65 lakhs. He constructed a building, ground floor 1,300, first floor 1,100 at a cost of 1C. The average replacement cost of the building is rupees 22 per square meter, 22,000 per square. It is a load-bearing structure. Lifespan can be assumed as 60. The percentage of the building is 20 years. Prevailing market rate is rupees 8,500. Guideline rate is 17,000. So, Siddharthji, here also salvage value is given. Write question 2 and mark it. So that is in question 2, it is there in the question paper. So that's why I didn't write. Okay, fine, let it be. Otherwise, in the case study itself, they will give. So what are the data available? Extent of plot, write down 2,200. Purchase cost of plot 4,65,000. So from which unit rate of the plot you can get. Okay. Guideline rate 1,700 square meter. Area of building, ground floor and first floor is given. Historical cost of the building, where it is given. Let's see. Ah, 1 crore is written at a cost of rupees 1 crore. Correct. Replacement rate is given 22,000 per square meter. Type of structure, load bearing. Life of building 60 years. So let's go to the questions. Question number 1. What is the replacement value of the building? So again, we'll go to the building component. Plinth area we know, first floor and second floor. So total built up area is add together, you will get 2,400. Average replacement cost is given 22,000 per square meter. Replacement value, just multiply both of them, you will get replacement value 5.28 C. Option A. Okay, this is a simple question. 2. What is the depreciation percentage by SLM? Assuming a salvage value of 10%. So depreciation percentage is 10%. So we have these details. Age of the building is 20 years, life of 60 years, salvage value 10%, depreciation is age by life, 100 minus salvage. So 20 by 60 into 90, 30%. So it's all a simple one. Question number 3. What is the depreciated value of the building? Depreciated. So solution again. Replacement value is 5.28. Depreciation value 15840 from the previous one. 30%, no? You take 30% of replacement value. That will give you 0.3. You multiply 528 into 0.3. So you get 158.40, 1.1 C, 1 crore 58,000, 58 lakhs 40,000. So that is depreciation value. You got 30% depreciation. So it denotes depreciation value. So minus it, depreciated value will get. Replacement cost minus depreciation rate will give you depreciated value. So here's a small twist is there. That's all. Because you are not directly calculating depreciation value. That you have to take from this portion, 30%. Previous question, second question. From the depreciation value to find out the depreciation value. These are the small twist. Okay. Question number 4. What is the depreciation value of the building? Now, depreciation value, now they are asking. Okay. For 1 point, same thing, 1 crore 58 lakhs 40,000. 30%, no. So as a fourth question, they are asking depreciation value. Just twist or question 5. What is the total value of the property? So extent of plot you know, prevailing unit of plot you know, value of plot you know, because extent of plot into prevailing unit rate, all given in the question. So just multiply it, you'll get the land value. Depreciated value you got in, I think, question number 369. So 369. Add together, you will get 5.566 C. Okay. No, crore. I mean crore. 5 crore 56 lakhs 60,000. Okay. So next question. What is the rate of depreciation of building if value is to be estimated by linear method? Very interesting. So again, if you are using constant method, percentage method, or linear method, you have to use this formula: 100 divided by total lifespan. This on this slide, not. So you got depreciation percentage 1.667. Here only some people are in doubt. Most of the IBB exam candidates are not familiar with this calculation of constant percentage method. I have seen so many places. It's very simple. 100 divided by expected lifespan of the building. So depreciation percentage. Now question number 7. What is the depreciated value of the building adopting linear method? So depreciation, linear method means depreciation value. Directly you apply the formula. Replacement value is 5.28 C. Then rate of depreciation you found now just now 1.667. And its age of the building is 20 years. Apply the formula, you will get 376, 900, 200. So that in the question, this 200 last 3 digits are not there. See, so we take out 200 rupees after all. So we write A is right answer. You can round it off. Small differences. That's what I am telling you. It is small, like 200 or 1000. No. Nearest answer. So what is the balance sheet economic life? Balance economic life, same thing as this thing. Total life minus age is balance. Same question, same type, very easy. Now, question 9. If the salvage value is nil, what is the depreciation percentage of the building by straight line method? So here no salvage value is given, nil, it is 0. So 20 by 60 into 100. That is, so if salvage value is considered, it is 30. If no salvage value is considered, it is just multiplication by 100, 33.33. So 3.33 higher because no salvage value is there for depreciation. So that is why insurance people are doing this. It is higher side depreciation, 3.33%. Now question 10. What is the book value of the plot? So book value we know. Book value of the plot is the amount spent by the owner at the time of purchase initially. It does not change forever. Book value of the plot remains same at the all times. The amount spent by X is 465 for procuring the here the twist. See here when he bought the land, there was no building. So building depreciation, it won't come here. Building component is not available, not applicable here. See the question. Then only you will understand. Only the land he paid 4,65,000. Go to the question first. Question. But X purchased a vacant land, vacant residential plot of 2,200 square meter for rupees 465. Then he constructed. So if he bought the plot, land and building together, then only we use depreciated value of building component. Here he purchased only land. So the book value is only land. I want some feedback for this information. The book value is 465. Any doubt? It's an important point, very important point we are discussing. No answer from Tulsiramji also. Nobody else. Yes, book value. No. Book value is named not as historical value. Well, you cannot say so. There is a slight difference because book value generally it is only for the amount spent by the owner during the purchase. That is book value. Whereas historical value changes. Historical value changes including building construction also side. I will give you the historical value definition now. Okay, this is the last question I think in this slide. Oh, again, question 11. What is the book value of the building on date of assuming the depreciation as prescribed by income tax is 5%? So 5% here they are asking. Wait, your answer will come. So what is the book value of the building on assuming depreciation as prescribed by 5%? So that is to be done by written down value method, WDV method. So just go through it. Same formula for written down value method. Historic. See here it comes historic cost of the building. See, book value and historical value is this is the difference. I hope you got it now. It includes building, historical cost. Land has got no historical value. It is book value. Okay, historical value when it comes building. So written down value of the building is required balance sheet. So P is equal to historic value. It is given. Depreciation is 5%. Age 20 years. Apply the formula. You will get 35 lakhs 84,000. That is the his book value or written value of the building. So you got it. So next slide or next question, let us see. Again from the same thing, any number of questions they can ask, but you will be getting either 6 marks or 12 marks question. So let us see what are the possible questions. What is the total book value of the property? Total book value is again they are adding plot plus written down value, whereas here they ask book value of the plot. What book value of the plot? Question number 10 is very specific. What is the book value of the plot? Whereas this question they ask total book value of the property, plot and property. always say plot is denotes land and property denotes land or land and building. So this property is land and building. So you can add plot value plus return value of the building. If the question comes like this, property. If it is plot, you can say only 4,65,000. Clear? Okay. So this is the slide which I have shown. I think maximum rate of depreciation 40%. So at income tax purpose only this one. They are given a set of plan and buildings, residential building, except hotels and boarding houses 5%. Hotels and boarding houses 10%. We only temporary shed 40%. That means 1 year, right? Maximum rate of depreciation 40%. Furnitures 10%. Furniture, sorry, furniture, any furniture, fittings including electrical fittings, air conditioners, everything, 10 years, 10%. Nowadays, as long as sensor, this electronic comes, electronic goods, you won't get 10%. In an earlier era, I know when we are using Kelvinator fridge or Alvin fridge, you know those. You may not be knowing these names itself. It seems we are older generation. Even our ambassador car, it will last longer than a new one. Why? There is no motherboard. There is no electronic this thing. Once the motherboard is gone, everything is gone. Computer, like computer, sensors, some mixie, what you call juicer. These things are not having this much period. 5 years finished, right? Only very few things like good watches may last bit more. I know my father was wearing a watch, Rolex, I think, for a very long time. It never get time also. It gives you exact time, even seconds. So wait a minute. So electronics is a problem. Electronics engineers, right? Because depreciation is now more than our era. Ambassador cars, they last at least 25. Even it is transferred to ancestral property. Ambassador car, I still remember. In Morris Minor car, which has a lever to start in front of it. So these kind of things are used for longer period. Now it is say 30%, 10%. Because of this electronic parts, no, it will damage so very fast. If something occurs, it will burn. So plant and machinery. This table is just for income tax purpose only. Here intangibles are given 25%. Last one, 11th one, you see, 25%. Now how patents, copyright, trademarks, license, 25% depreciation is given. That means within 4 years, it is intangible asset become zero value. Yes. Okay, let's go to the next one. This is a valuation done by cost index method. Now tell me what is cost index and cost inflation index. Cost index means there is no doubt. Cost index means with respect to Delhi scheduled of rate, what is the value of land in another city or a village? This is called cost index. So that is nothing to do with cost inflation index. Cost inflation is an economical phenomenon. That is inflation. Due to inflation, you put some constants. So that is different. So cost index method, suppose in Delhi, 1,000 square meter or take 1,000 for example. 1,000 square meter is getting for one seat. Or a building even. Anything, sorry, this is for cost index is for land. The other one is for converting this. Cost index for land is taken as what you call everywhere. It can be used. The particular area you have to multiply with a constant. It is published by CPWD in every year. So there is table in question paper. I don't think this question will come. Even though you have to be familiar with this eventual, in any case of eventuality, it may come, you have to write. Mr. Sharma started construction of 300 square meter building in Mumbai, 1998. Completed the same year, 2000. Same in 2000. Rate of construction, similar type of building, 92 at Delhi, following CPWD plan area rate is 3,200. 30%, 60%, 10% construction building done by these various years, 98. In 1998, 30% is completed. In 1999, 60% is completed. In 2000, 10% is completed, respectively. And corresponding CPWD cost index for Mumbai in those years were 142, 148, 156 respectively. That means if Delhi rate is 100, Mumbai rate is 1.42 times, 1.48 times, 1.56 times in 98, 99, 2000. So cost index differs yearly. So Mumbai, that particular area is more costlier than Delhi. It's an assumption in this case. This is for faculty assumption. I assume this one. So it's not, may not be right. You can get it from other sources. So this is for only for our question case study purpose only. I took 142, 148, and 156. The cost index of Mumbai in 2019 with respect to the base year 92 is 482. Economic life of the building is 85. So 2019 is given. Why that? Where is 19,019 somewhere here? Let us see. Question is organized like this for easy understanding. Okay. The plinth area of the building is 300 square meter, which is situated in Mumbai. Okay, economic life is 85. It is given somewhere here. Yeah, last. Not sure. 85. Mr. Sharma started construction in 98 and completed in 2000. In 1998, he completed 30%. 99, he completed 60%. 2000, he completed 10%. So total 100%. Basic plinth area rate building Delhi as 192 as per CPW is 3,200 square feet per square feet with base cost index of 100 at Delhi. So if it is in the base cost index in Delhi is 100, assumed as 100. Cost index in Mumbai is given for various 3 years, 98, 99, and 2000. Cost index in 2019 is 482. In Mumbai, it is understood. But the data valuation, okay. The data valuation is 2019. This is the crux of the issue. See, he completed the project on 2000 only, but data valuation is 2019. So that means that 2000 he completed 10%. That 10% you need not take. You got my point. That is why I see the date of valuation is 2019, whereas the building is 10% of the building is completed on 2000. I will go slowly, then only you can understand. Just read the data and any doubt you can ask. So it's clear. So what? So let's see the solution now. I think then you will understand more. There is nothing complication here. Only thing is that the completed period completion of year of completion is 2000, whereas valuation you are doing in 2019. So 2000 10% you did not consider at all. That's what my belief. Okay, not my belief, it is valuation. Now the question how they are going to ask, then we will see one by one. Data given, everything is written. Building area 300, commencement of construction 98, completion of construction 2000, plinth area. PA means plinth area. Even you can write PAR. Sometimes they will write PAR. PAR. PAR means plinth area rate. Plinth area rate in 92, Delhi is 3200. Stage of construction is given. Cost index is given. Economic life is given. Okay. How much expenditure Mr. Sharma made in the year 98 towards construction of his building? All right, a very simple question. 1998, we don't have any problem. Base year is 100. 92, 98 cost index is given. So cost index divided by 100 multiplied by the replacement cost. So plinth area is 300. Plinth area rate in 92, 3200 with base 100. So cost index in 92 is assumed as 100. It is given. So 90 in 1998 it is 142. So plinth area rate is equal to in 1998 the particular year is 3200 by 100 into 142. That will give you plinth area rate 4544. So instead of 3000 in 98 you have to pay to the contractor 4544. It was 3020 in 1992. It is increased. Why? The cost index. So you got that one. Now percentage of completion, how much? 30% is completed. So plinth area rate 30% completion is equal to 0.3 into 4545. So 1363.2 is the plinth area rate, completed plinth area rate. So value is 300 into 300 square meter. But you can do otherwise also. The other way, our way. 300 square meter. You multiply directly it with 4544. You will get total rate. Then take 30%. That will be logically good, you know, right? Am I right? Correct? Because instead of going plinth area rate multiplied by 0.3, they are reducing the plinth area. You cannot reduce actually 4544 into 0.3. It's a bit, I feel odd. So we'll do the one thing. Replacement plinth area rate present value is equal to. Before that, you do one step. Cost of construction in the 1988 is equal to this much. Then 30% is completion. Take 30% of it. So you will directly get this figure. I hope it is clear because there is no plinth area rate percentage. 30%. It is not okay. Calculation is same. You'll get same answer, but we never multiply percentage to a particular plinth area. It makes no sense. So let us be do in another way also. I hope you are clear about this. Okay. So let's go to the next. Yes, Ramji, I know your answer is right. How much expenditure Mr. Sharma made in the year 1999 towards the construction of his building? How much expenditure? So write again. You need not write again. You can write. It is 300 square meter. 92. It is 320 with the base. Cost index is given. So multiplied by cost index. Percentage of completion is 60%. Major portion is completed in 1999. So 60%. So again, plinth area multiplied by 0.6. Plinth area rate he got at 2. Value is equal to 300 into that particular plinth area. Okay, fine. Instead of that, you can directly apply 300 into 4736 into 0.6. So in one step, it is over. I hope it is clear. 8,52,480. Now, again, in 2000, 10% is remaining now. So same calculation. Cost index is given. Cost index both the year, multiply it 156. So you'll get plinth area rate 492. Again, 0.1 10%. So 0.1 into 490 is equal to 499.2. Again, multiply by 300, you will get 1,49,760. So the answer is there. It is D. Now, what is the historical cost of the building? Here also, just check it. Amount spent in 98, 4 lakhs, 4.08 lakhs odd. Amount spent in 99, this much. Amount spent in 2000. All together. It is the historic cost. Historic cost means everything is getting into. Don't write 98 or only. It is total building cost at the end of the period. So it is totally amount spent. You calculated all this. Amount spent in 98 calculated. Amount spent in 99 calculated. Amount spent in 2000. That also you calculated. So this is the total amount. This is called historical cost. Shall we move to the next slide? Okay. Question 5. What is the replacement cost of new building in 2019? Here, this is the problem which we need to concentrate. So, 2020, we won't consider at all. So, construction cost is now new building. Plinth area, basic rate is there. Cost index of 2019 is given directly, 482. That is why they give in the question paper itself. 2019 cost index is 482. You want to see the question paper? See, cost index in 2019 is 482. Last slide. Last but one. Yeah. It is 482. For this purpose, they have given the cost index in 2019. Okay. Finished? Where are we? This one. Total building in 2009. Yes. Depreciation replacement cost of the building 2019. Okay. Before that, we have a question. Yeah. This one. So I hope you got this point. Yeah. Okay. So replacement cost is using the same thing. You can apply. Now question number 6. What is the depreciated replacement cost of building in 2019? Depreciated cost in 2019. Here they won't consider, let us see, replacement value is equal to, we found it already 46, 27, 200. Year of construction foundation 98. 2019 to 21 years. See, this is very important. This type of question. Here we need to apply your mind very carefully. So here what is the question? What is the depreciated replacement cost? So we know the replacement value. Then you have to depreciate it. So year of construction is 98 minus 2019, 21 years. Economic life is given 85. Salvage value not given, assumed as nil. Yes, you see here in this question they are not given any salvage value, so assumed as nil. Depreciation is equal to 21 by 85 into 100, 24.71%. Depreciation value, you multiply 46.27 lakhs, the first one, into this figure, percentage. So you will get 11,000 something, 11.43 lakhs. So depreciated value minus from the total, or you can take otherwise also, 100 minus 24.71. So you got depreciated value. The answer is not tallying with any options given. So let's what are the answers given? The depreciated cost value is 34 lakh 34.83. Let us see, 34.83 is the 35.98 is the, here it is 34.83. Better to leave that. Better to leave that question rather than inviting half mark, this 0.5 marks. It is not matching, no? So don't try it. You know the method now. If the correct answer is there, you will write it. So this is to, we need to calculate depreciation from start of construction or from completion. See the question, it depends on the question. See, what is the depreciation cost of the building in 2019? Right? So what is the replacement value, total value? 4627, from where you got 4627? See, replacement value, plinth area into 3 to, that is replacement value. Not either in the start. See where data, you see the data. Building area 3000. Where is that? Plinth area rate in 92 is 3200. 92. So it's from the beginning, not even 98 or anything. You got this plinth area rate. Now 98, 30%. So what is that? Okay. No, wait. We have found it somewhere here. Yeah, it is plinth area rate is given as, then you convert it to 482, no? So it is in 2019, 4627. So what is the depreciated replacement cost in 2019 is asked. You got my point. 2019 replacement cost. So 2 plus 19 replacement cost is you know that replacement value 46 to 27 replacement value. Now only depreciation is to be considered for 2019. Think, Tulsiramji, is it right now? Yeah. So this is 482. We already multiplied for to get the 2019 rate here in this case. So when you ask, the question is what is the depreciate replacement cost of building in 2019? So replacement cost you will consider here depreciation. that depreciation is as usual we found 21 by 85. Then the remaining portion is depreciated value. So the answer is anyway, the answer is not adding the option, that is different thing, but this is a method to find out. Let us calculate depreciation value by assuming salvage value. Okay, this is just to see whether they miss the salvage portion. Here, let us take 10% to know it is tally. 10% is taken. So 22.24 is the depreciation. Depreciation value, you got it. 0.224 multiplying with the 47, 10 lakhs 29. Then depreciation value is equal to 35.98 lakhs. It is nearer to 35. The option is D. If salvage value is taken, but they are not given the salvage value, so let us don't take anything, because it is their mistake. They could have say salvage value is assumed as there is this is for just show the illustration purpose only, but here option is not given tying it. So better to leave it. Question 7. What is the depreciation value of adopting linear method? Same thing, linear method. Solution. You get replacement value 46. Rate of depreciation is 1.16. Why we are taking 46 every time? Because that is the value of the building in 2019. Date of valuation is 2019. So we will consider only 2019 cost index. So applying cost index, you get 46,000, 46 lakhs 27,200. So rate of depreciation, you know 100 by 85, 1.176. And you know 21 years. So apply, you will get again, you see in bracket 1 minus 1.17. Here it is there directly given. Yeah, it's okay. 36 lakhs 9,260. Option A, it is there. Yeah, so this is right. Now question number 8 in the same problem. In the above question, what is the depreciation value by linear method? So that is what we, okay, sure. Next slide. Now case study 8, petrol pump bunk by profit method. I think it's enough for the day. This needs a lot of explanation and everything, this particular case study. So shall we end this for today's class, because I am supposed to take this tomorrow. So we'll stop it here today. Tomorrow 9:30, let's start, and let us finish early also. Meanwhile, any doubt, you can post it in the WhatsApp group. Okay. Okay. Thank you. I'm also feel a bit tired. We have plenty of time also tomorrow. One more day is there, so by that time we can thank you Ankit Jain. So we can have more time also, so we can spend it very what it call effectively, because we are covered as so many basic and so many other questions also in case study. Now this is a special case, that you need to win. It will take time, that's why. So you need to know the procedure, income capitalization and all. Will you architect Surabhi Singh. Shall I ask you one question? What is fusion architecture? What is, I don't know. Any idea?
Sir, it's my firm name.
Oh, okay. Fusion.
Yeah. Fusion Arc Atelier.
Okay.
Yeah.
Okay. So let's see you tomorrow. Shall I leave the meeting? I don't know how to leave. Okay, yeah, it is there. But I think better I'll call Guptaji and leave the. So tomorrow 9:30 sharp, 9:30, please come. There are very beautiful questions coming up for tomorrow. Okay. Uh, what is that? Leave the meeting option.